Welcome back to docket number 2020-125E, Dominion Energy of South Carolina's application for rate adjustment before the Public Service Commission of South Carolina. We're going to go ahead and get started with applicant's witness, but before we do that, please join me in a moment of silence. Thank you. Commissioner Williams, District 1, Commissioner Williams, are you with us?
Present virtually.
Thank you. Vice Chair Belzer?
Present in the hearing room.
Commissioner Caston?
Present in the hearing room.
Commissioner Urban?
Present virtually.
Commissioner Thomas?
Present virtually.
Commissioner Powers?
Present virtually.
Chairman Williams is present in the hearing room. Attorney Willoughby?
Mr. Chairman, this
Yeah.
is Andrew Bateman with ORS.
Hey, Attorney Bateman, go ahead.
If I may, I have two quick preliminary matters.
Okay, go right ahead.
One, Mr. Chairman, ORS heard the chairman's request yesterday to seek certain efficiencies as we go throughout this proceeding. As a result of that request, Mr. Chairman, we have reached out to all of the parties. We have heard back from all of the parties except for Dominion. We are hoping that once we hear back from Dominion, we'll be able to propose something that will achieve at least some efficiencies for this proceeding. So I wanted to first and foremost make you aware of that. Secondly, Mr. Chairman, we also heard the possibility that this proceeding may go into Saturday in the weekend. I would request if that were likely, that the chairman would make us aware. I don't know that ORS would necessarily object. However, we would have to make accommodations for our witnesses. So to the extent possible, if the chairman could make us certain whether that was going to occur, ORS would be most appreciative. Thank you.
No problem. Attorney Willoughby, do you know if and when the company will respond to ORS's request?
Mr. Chairman, Andrew was kind enough to call me after the hearing last evening. Of course, that was late, and he had a proposal on maybe just a stipulating certain witnesses' testimony into the record. We are evaluating that at this point, and we will respond to him later this morning.
Thank you, sir. All right, any other preliminary matters?
Thank you, Mr. Chairman.
Oh, no problem, Attorney Bateman. And thank you, Attorney Willoughby, for working with ORS. All right, if there are no other preliminary matters, Attorney Willoughby, recall your witness, and let's proceed.
Dr. Vanderweyde, I see you on the screen. Good morning to you. If you would say good morning back, we'll know that your audio is working.
Good morning.
Perfect. That's working fine. Dr. Vanderweyde, I would remind you that you're still on the witness stand and you're still under oath.
I understand.
All right, Attorney Eaton, please proceed with your cross-examination.
Sure, Mr. Chairman. Good morning, Dr. Vanderweyde. Can you hear me okay?
Yes, I can.
All right. I want to pick up where we left off yesterday, where we were talking about your financial risk adjustment that's contained in your testimony. And I believe yesterday that before we stopped for the day, you had testified that you had not performed the mathematical calculations to determine what the average debt ratios would be for your proxy group of companies if you use the numbers from the statistical array on the sheet we were looking at. Is that correct?
Well, it depends on what numbers in the statistical array. It's correct that I said that I had not performed a calculation using the book value capital structures shown in the value line report, including the book value of common equity. I had used instead the market value of equity.
Okay. And in preparing for your testimony today, have you reviewed the direct testimony of DOD witness Dr. Zen Zhu?
Yes, I have.
And have you also reviewed Mr. Zhu's exhibit?
Yes.
There's one exhibit in particular I want to show you, and hopefully I can share my screen and show you that pretty quickly. I keep getting messages saying I don't have permission to do that. I'm not sure. Do you have Dr. Zhu's testimony?
Yes, I have both his direct and his rebuttal testimony. Which one would you like me to look at?
Sure. In Dr. Zhu's direct testimony, there is Exhibit ZZ-3. Could you turn to that?
Yes, I will. Is this the one that is at page 1 of 2 that has the capital structure?
Correct. And there's, yes, it's a 2-page exhibit saying capital structure, and I want to turn your attention to page 2 of that exhibit. Do you have that in front of you?
Yes, I do.
Would you agree that page 2 of Exhibit ZZ-3 provides the common equity percentages for the companies in your proxy group dating back to 2010?
Just to be clear, I would agree that it contains the book value common equity ratios for my proxy companies. It does not contain the market value common equity ratios that I used in my testimony. Okay.
And would you agree, subject to check, that the book value equity percentage during this time is on average around 47 to 48% equity for this proxy group?
I would agree with that, and I would remind the listeners that I use market value equity ratios for the reasons cited in my testimony, and not the book value equity ratios.
Now, I would like to ask you a few other questions, and it doesn't have to do with that particular exhibit. Dr. Vanderweider, are you aware as to whether this commission has ever authorized an upward adjustment in ROE for financial risk?
I have not examined whether they have or have not.
And can you tell me how many times you believe you've offered testimony in favor of a financial risk adjustment?
I have not counted that number of times. I just don't recall.
I believe you said you've testified in over 500 proceedings, so I know that's a lot of proceedings. Do you believe you've testified in favor of a financial risk adjustment more than 100 times?
I just don't know. I'd have to do a special study of that.
You have any guesstimate that's, more than 50, more than 100?
No, I do not.
And is it more than 25 times?
I'm guessing that it is, but I have not studied that to be precise.
Have you ever offered testimony in favor of a downward adjustment?
I don't know what you mean by a downward adjustment.
Well, in this case, the financial risk adjustment is an upward adjustment for the ROE.
I wouldn't call it an upward adjustment. It's the market value capital structure which is the right capital structure to use for estimating the cost of equity. There's no adjustment. It's the correct capital structure for estimating the cost of equity, because the cost of equity depends on the market value capital structure, not the book value capital structure.
Can you identify a utility commission in the United States that has adopted a financial risk adjustment similar to the one you proposed for any investor-owned utility, electric utility?
I believe there are some, but I have not investigated that. I do know that in recent cases that I've been in the states of Georgia, for example, the allowed common equity ratios were around 56% equity, which was very close to what my market value equity ratio is in this proceeding.
I want to turn your attention to what we have marked as Walmart Cross-Examination Exhibit 2. Do you have that?
Yes, I do.
And I want to make sure the commissioners have that as well, because I am I'm having trouble sharing my screen. It's just not letting me do that. And Mr. Willoughby, too. Do you have Walmart Cross Exhibit 2?
We do.
Okay, thank you. And Dr. Vanderwyde, did you say you have that exhibit?
Yes, I do.
Okay. All right. Can you identify the exhibit that we've marked as Walmart Cross Exhibit 2?
It contains the request for number 5-22 and my response to 522.
Okay, and that's a Dominion response that you sponsored. Is that what you're saying?
Yes.
Okay. At this time, I'd like to move Walmart Cross Exhibit 2 in for admission as the next hearing exhibit.
We have no objection, Mr. Chairman.
Thank you, sir. Walmart Cross-Examination Exhibit 2 will be marked and entered into the record as hearing exhibit 18.
Thank you.
Oh, I'm sorry, 19.
Sure, thank you. Okay, Dr. Vanderwyde, in this discovery request from DESC, it looks like the answer was divided into subparts. Do you see that?
Yes.
And I want to go to subpart A, and there's a chart in subpart A. Do you see the chart?
Yes, I do.
And that chart lists 5 different dockets. Do you see that?
Yes.
Okay, and so is this information about these 5 dockets, is that information that you provided to Dominion so they could provide it to us?
Yes, it is.
And do you recall providing testimony about a financial risk adjustment in the 5 cases that are listed in hearing exhibit 19?
Yes, I provided testimony regarding the required ROE and the equity ratio that I would recommend based on the financial risk adjustment.
Do you know whether, first off, the jurisdictions that are listed for these dockets are Georgia, Tennessee, and Florida? Do you see that?
Yes.
And do you know whether the Georgia, Tennessee, or Florida commissions adopted your ROE recommendation in any of these cases?
Well, I don't believe that they specifically adopted my financial risk adjustment. However, they did adopt a cost of equity and capital structure that is very comparable to what I am recommending in this case based on the financial risk adjustment. Namely, in the first case for July 19, docket 42-516, the commission, that's the second case. In the first case for Liberty Utilities, the allowed ROE was 10.2% and the equity percentage was 56%. In the first Georgia Power case for July 19, the allowed return on equity was 10.5% and the allowed equity ratio was 56%. In the Atlanta Gas Light case, the allowed return on equity was 10.25% and the allowed equity ratio was 56%. And in the Florida City Gas case, the allowed return on equity was 10.19. In the Chattanooga case, I don't recall the particular allowed return on equity, but I do recall that a very big issue in that case was one of double leverage, which is not an issue in this proceeding.
Thank you for that response. I want to go through them briefly. The first case, Liberty Utilities, it was a docket in Georgia. I believe you said that the ROE that was actually authorized was 10.2%.
Yes.
And in that case, had you proposed 10.5% ROE?
Yes.
And for the second case, which is the Georgia Power Company case in July of 19, I believe you said that a 10.5% ROE was authorized. Is that right?
Yes, it is.
And you proposed a 10.9% ROE?
Yes.
And then turning to the Atlanta Gas Light docket in Georgia, I believe you said the commission authorized an ROE of 10.25%. Is that right?
Yes, and an equity ratio of 56%.
And in that Atlanta Gas and Light case, you proposed a 10.75% ROE?
Yes.
And in the Florida City Gas case, I believe you said that the parties settled on a 10.19% ROE. Is that right?
Yes.
And do you recall recommending an ROE of 11.25% in that case?
Yes.
All right. I want to ask you a little bit more questions about this Chattanooga gas case. Do you recall the ROE that you recommended in the Chattanooga gas case?
No, I don't recall that.
Do you recall that you had recommended an ROE of 10.3% plus an additional 95 basis points for a financial risk adjustment, which would equal an ROE of 11.25%? Does that sound familiar?
I was unable to locate that in my records, but I believe that they actually did allow a 10.2, as I suggested earlier, with a 56% equity ratio.
Okay, but subject to check your own testimony for the Chattanooga gas case, would you accept that you recommended a 10.3 ROE plus 95 basis points for a financial risk adjustment with an ROE of 11.25%?
I would accept that subject to check.
And do you recall whether the Tennessee Public Utility Commission adopted your recommendation for a financial risk adjustment?
I don't believe they did, but as I say, they did recommend an equity ratio of 56%, which is similar to what the company is requesting in this proceeding.
I would like for you to turn to what we have marked as Walmart Cross Exhibit number 4. Do you see that?
let me, look for it a minute.
Sure.
Yes, I found it.
Okay. And Mr. Willoughby, do you have that as well?
I do have your cross-examination exhibit number 4.
All right, thank you. I'll represent to you, Dr. Vanderwyde, that this is actually an excerpt from a Tennessee Public Utility Commission amended final order for docket 18-00017, which was one of the dockets listed on hearings exhibit 19. Is that right?
Yes.
Okay.
Stephanie, this is Mitch Willoughby speaking. I do note on this exhibit 4 that there's some highlighting that obliterates, it basically redacts the document, and so that may be a problem. But you continue, and then if I have an objection, I'll note.
Sure, and I certainly didn't intend to have highlighting that obliterated anything. We were trying to provide the relevant excerpts from the from docket 18-00017, the order that we've entered there. We're just trying to provide just the relevant parts of that order.
Attorney Willoughby and parties, to help our court reporter identify who is speaking on the record, please turn your camera on whenever you make a comment.
Thank you, Mr. Chairman. I apologize for not doing that before, but do that in the future. Thank you.
Mr. Chairman,
Yes, ma'am.
I haven't read the document, but just scanning it, I don't see anything obliterating any portion of this excerpt. So I don't know if Mr. Willoughby has a bad copy or what, but I'm not seeing anything that obliterates anything.
If I have questions, perhaps the way to address it is if there's something that you, Mr. Willoughby, or you, Dr. Vanderwyde, don't see that I'm asking you about, just let me know, and I can try to provide another copy of the exhibit. The version that I have is easy to read.
I've secured another copy, Stephanie, and I can't.
I think you were cut off, Mr. Willoughby.
Attorney Willoughby, we've lost audio with you. Attorney Willoughby?
He's calling right back in.
Thank you.
So I'm back on the line. Sorry.
Thank you.
Attorney Willoughby, I think you said you had another copy, but then you got cut off, so I wasn't sure what you were trying to say.
Yes, I have a copy that I can see through the highlight.
Okay, thank you. All right, and Dr. Vanderwater, do you recall testifying or providing testimony in docket 18-00017?
Yes, I do.
Okay. And I'd like to direct your attention to page 64 of the final order. We started the excerpt at page 63, which was the section titled Return on Equity. So if you could turn to the next page, which is 64. Do you see that?
Yes.
Okay. Were you aware that the Tennessee Commission rejected your 11.25 ROE because it was, quote, out of line with average equity returns, end quote, and was, quote, clearly inconsistent, end quote, with decisions related to other natural gas companies?
Yes, I was aware of that, yes.
And then if you can turn to page 65, which is the next page of Walmart Cross Exhibit 4, on page 65, toward the bottom of the page, the order is discussing your testimony. Do you see that?
Yes.
Do you see that the Commission not only rejected the proposed 11.25% ROE, which included the financial risk adjustment, but it also rejected the 10.3% ROE you calculated as part of your base cost of equity analysis?
Yes.
Then if you go to page 66 of the Walmart Cross Exhibit 4, you see that the Commission discounted your analysis down to a 9.9% ROE recommendation and then actually awarded an ROE of 9.8%.
Yes, I do.
And so ultimately, the Commission settled on an ROE that was 145 basis points below your recommendation.
Yes, and also considerably above the recommendation of other witnesses in this proceeding. And again, your Cross Exhibit 2 shows 5 cases. You focused on the one with the lowest allowed return. The other 4 had allowed returns that were higher than 10.19, and one had an allowed return of 10.5. And all of them had equity ratios of 56%.
I'm just going to ask us to get back to it. Did you ever send me your accomplishments for 2020?
Someone has a hot mic.
You couldn't do it right away, and then you were going to...
Someone is asking for accomplishments for 2020. If you could mute your mic. Thank you. Sorry about that, Attorney Eaton. Please continue.
Sure. Thank you very much. At this time, I would like to move for admission of Walmart Cross Exhibit number 4. It's the next hearing exhibit.
Walmart cross-examination.
Chairman.
Yes, Attorney Willoughby.
Yes, sir. I would object to, this is not a complete copy of the order. I haven't seen the complete copy of the order. If Ms. Eaton wants to put in the entire order, I would not have any objection to the entire order being brought into the record as a cross-examination exhibit using the explanations that Dr. Vanderwater has given. But to pick and choose, I think would be inappropriate.
Certainly, Walmart does not object to putting in the whole order. I can explain that we have used the excerpt to facilitate the cross-examination because the actual order is over 70 pages long, and that would have been 700 pages to copy for everybody there at the Commission. And so we are happy to substitute the full order in place of what we've marked as hearing exhibit, cross-examine exhibit 4, if the Commission would like.
That's fine.
Okay, we will provide that to Ms. Wheat so she has it, and to you as well, Mr. Wilby.
All right. So
Thank you.
Walmart Exhibit 4, You're going into, when are you going to do that? When are you going to submit the full document, Attorney Eaton?
After I finish. After I finish this examination.
Okay,
Today.
so we're going to go ahead. So Walmart cross-examination Exhibit 4 will be the full order, the
Correct.
Tennessee Public Utility Commission, docket number 18-0001, January 15th, 2019, will be entered as hearing exhibit, marked and entered as hearing exhibit 20.
Thank you, Mr. Chairman. Lastly, Dr. Vanderwater, I want to talk for just a minute about your flotation cost, the flotation cost adjustment that you've included in your calculations. Am I correct that you upwardly adjusted your discounted cash flow results by 20 basis points to account for flotation cost?
Yes.
And you did the same for your ex post risk premium analysis?
Yes.
And you did the same for your CAP-M historical analysis?
That's correct.
And you did the same for your CAP-M forward-looking analysis?
Yes.
Okay, I'd like for you to quickly look at what we've marked as Walmart cross exhibit number 3. Do you have that?
I do. If I can look for it here. Yes,
Sure.
I have it.
Okay. And Mr. Willoughby, do you have that as well?
Yes.
Okay. I will represent to you that Walmart cross exhibit number 3 was prepared based on your on table 1 in your own rebuttal testimony. But if you would like to have your table 1 from your rebuttal testimony open to double check us, I am happy to wait for you to get that.
Okay, I will look for that. Table 1 of my rebuttal testimony. Is that correct?
It is.
And what page is that on?
Table 1 in your rebuttal testimony. Let me get it pulled up here.
I just found it. It's on page 6.
Okay, thank you. Have you had a chance to look at the 2?
At table 1, yes.
Okay, so Walmart Exhibit 3 has taken table 1 from your rebuttal testimony, and we've added a column to it. Do you see that?
Yes.
Okay.
Portion of table 1.
That is
and
correct.
added a to it.
That is correct. And so, would you agree that the model results reflected in the second column of Walmart Cross Exhibit 3 are the results of your cost of equity analysis as reported in your rebuttal testimony at Table 1?
Yeah, the model result is the same as the results that I show in Table 1 for each of the methods and the average. So yes, they are the same.
Okay. And so, if the commission were to exclude flotation cost from your Table 1, would you agree that your discounted cash flow, ex post risk premium, CAP-M historical, and CAP-M forward-looking results would all decrease by 20 basis points?
I was looking at the average, which was only 13 basis points. Which ones, you picked out some other ones.
I was simply saying that if the commission were to exclude the flotation cost from your table 1, would you agree that the discounted cash flow, ex post premium, cap M historical, and cap M forward-looking results would decrease by 20 basis points?
Yes.
And that reduction is reflected in the third column on Walmart Cross Exhibit 3.
Yes.
And subject to check, would the average result without flotation cost included be 9.57%?
Yes, and that would be rounded to 9.6 because I rounded everything to the first decimal place, so it would be roughly 10 basis points.
Okay. At this time, we would like to move for admission Walmart Cross Exhibit number 3 as the next hearing exhibit.
Mr. Chairman, we have no objections.
Thank you. Walmart Cross-Examination Exhibit 3 will be marked and entered into the record as Hearing Exhibit 21.
Thank you, Mr. Chairman, and thank you, Dr. Vanderweider. That's all the questions I have.
Thank you.
All right, thank you, ma'am. Sierra Club,
Sierra Club has no questions. Thank you.
United States Department of Defense, and all other federal agencies.
Good morning. Yes, getting my video started. I have a few questions.
Yes, please proceed.
Okay. Good morning, Dr. Vanderweider. I'm Emily Medenal on behalf of the Department of Defense and all other federal executive agencies. Good to see you again.
Good to see you too.
Now, Dr. Vanderweider, Table 1 on page 45 in your direct testimony gives your cost of equity model results, correct?
Page 45.
Correct.
I'm sorry, I'm looking at the rebuttal testimony because that's what I just had pulled up. Let me get my direct.
Right. And I'm going to ask you about your rebuttal as well.
Okay, so my direct testimony, which page was it again?
Page 45.
Okay, I'm there.
Okay, and Table 1 on page 45 gives your cost of equity model results. Is that correct?
Yes, it is.
Okay, and then you updated your Table 1 in your rebuttal testimony on page 6, correct?
Yes, I did.
Okay, and as we talk about your results in my questions today, I'm going to be referring to the results in Table 1 of your rebuttal testimony.
Okay.
Okay, and the average cost of the equity in that table is 9.7%, correct?
Yes. Prior to the
Okay.
financial risk adjustment.
Correct. And I know Ms. Eaton just went through several questions on the financial risk adjustment that will eliminate some of my questions. But you do agree that Dr. Zhu, Dr. Woolridge, and Mr. Rothschild all disagreed with your financial risk adjustment, correct?
Yes.
Okay. And if the commission were to also not allow the financial risk adjustment, you would agree then that your results would be 9.7% instead of 10.3%, correct?
Yes, under that hypothetical, it would be 9.7. I don't agree with that they should dismiss it, but it is.
Okay,
Would be
and I
9.
understand. Okay, and I understand that. I want to now turn to your comparable earnings method?
Yes.
And that's one of the models you use to determine your return on equity, correct?
Yes.
And then in your table 1 in your rebuttal, that yielded a result of 10.0%, correct?
Yes, it did.
Okay. And the comparable earnings model calculates a return based on book value. Is that correct?
Yes, it is.
Okay. And you agree that book value is different than market value?
Yes.
Okay. Do you also agree that Dr. Zhu, Dr. Woolridge, and Mr. Rothschild all objected to your use of the comparable earnings method?
Yes, I am aware of that.
Okay. Are you also aware that FERC has rejected the comparable earnings model?
I'm not entirely sure. I'd have to take a look at that again to refresh my memory.
Okay. Would you be surprised to know that that FERC said that the comparable earnings model has been thoroughly discredited?
They may have said that. I don't believe it has been thoroughly discredited, but that's their opinion. I take it that is their opinion from what you said.
Okay. All right. And I understand this commission is not bound by FERC. It has the authority to determine whether it wants to allow or disallow the comparable earnings method. However, if this commission were to adopt FERC's position and disallow the comparable earnings method you use, then your average return on equity results would go down, correct?
Well, it would go down, but not substantially, because I have 6 methods there, and the 10 is fairly close to the average for all 6, so it wouldn't be a substantial change.
Okay. Would it be 10 basis points approximately?
Approximately, yes.
Okay. All right. I want to talk to you about your flotation costs. And again, I don't have as many questions now after Ms. Eaton. I just want to have a clarification. Your flotation cost adjustment, were they added to both your ex ante risk premium and your ex post risk premium methods?
I'd have to check that. Do you have a page in my testimony that you're referring to?
Well, you said you included a 20 basis point flotation cost, correct?
Yes.
Which cost of equity models did you add your flotation cost to?
I'd have to review that. I don't recall off the top of my head.
Okay. All right. But you would agree that it adds 20 basis points to some of your models. Is that correct?
Yes, and I think we determined from a prior exhibit, the cross-examination exhibit, that it really had the effect of about 13 basis points.
Okay. All right. And again, if the commission were not to allow for your flotation cost adjustment, your cost of equity results would go down, correct?
Slightly, yes.
Okay. And if it was, 13 basis points or 20 basis points, and affecting the models that you used, where you added the flotation cost, that would be adjusted downward, correct? All those models would be adjusted downward, correct?
Well, if you change one of my numbers downward, that would of course reduce the average, but it doesn't make it correct to adjust it downward.
And I understand you disagree with that, but I'm just asking you a hypothetical. If it was not allowed.
Yes.
Okay. And you do agree that Dr. Zhu, Dr. Woolridge, and Mr. Rothschild all disagree with your inclusion of the flotation cost, correct?
I understand that they disagree, but I believe that the logic of my flotation cost is impeccable, and I would continue to recommend it.
Okay, all right. And subject to detect, if the commission were not to allow flotation costs, in addition to not allowing the comparable earnings model, your average return on equity would be approximately 9.4%, correct?
I haven't made that calculation.
Okay. All right, I want to turn to your use of the EIA interest rate forecast. In determining your CAPM and risk premium methodology results, use the U.S. Energy Information Administration, or EIA, interest rate forecast, correct?
Yes, as one of the two interest rate forecasts.
Correct. You also use value line, correct?
Yes.
Okay. I'm just going to talk about the EIA for now. And you would agree that the credibility of the EIA interest rate forecast was challenged by Dr. Zhu in his testimony, correct?
Yes.
Okay. Would you also agree that Dr. Zhu, Dr. Woolridge, and Mr. Rothschild all use the actual interest rate instead of a forecasted interest rate like you did?
I would agree that they did. I don't agree with their use of the current interest rate as opposed to the forecasted interest rate.
Correct. I understand that. If the commission were to disallow your use of the forecasted interest rate, along with the other items I mentioned, that the market equity ratio, the financial risk adjustment, the comparable earnings method, flotation costs, your end result would be lowered substantially, correct?
Under that hypothetical, again, I disagree with the exclusion of any one of those items that you mentioned.
Right, and I understand that. But would you agree, subject to that, your result would then be approximately 9.1%?
I haven't done that calculation.
Okay. All right. Thank you. That's all I have.
Thank you, ma'am. Frank Knapp, Jr. South Carolina Coastal Conservation League and Southern Alliance for Clean Energy.
Thank you, Mr. Chairman. We have no questions.
South Carolina Energy Users Committee.
Mr. Chairman, no questions. Thank you.
South Carolina Department of Consumer Affairs.
No questions, Mr. Chairman. Thank you.
Office of Regulatory Staff.
No questions, Mr. Chairman. Thank you.
All right, commissioners, you have questions?
Mr. Chairman?
Commissioner Irvin.
Chairman.
Thank you. Sir, did I understand that you previously indicated you've testified over 500 times before various public service commissions around the country?
Yes, that's correct.
And is it more than 500?
It's approximately 550, I believe.
All right, sir. At any of those hearings, did you testify or have you testified on behalf of a governmental entity, such as a public staff or a regulatory staff?
I can't recall. I don't believe so, but I can't recall right now.
Okay. Have you ever testified for a nonprofit entity like AARP?
No, I have not.
Have you ever testified for a corporation like Walmart?
I haven't testified for Walmart. I can't recall if I have ever testified for a corporation like Walmart.
Okay. Well, if you did, you'd probably remember it, wouldn't you?
No, I don't think so. Not out of that many cases over that many
All
years.
right. Well, is it fair to say that in the great majority of cases that you've testified in, it's always been for the company, the applicant, the utility. Is that correct? It's not a hard question.
Well, and, I just want to be clear. In some cases, the issue wasn't an applicant because it wasn't a rate case. So there were
Fair
many
enough.
cases where more general issues involved and not the cost of equity. If it were a rate case, I generally did testify for the utility.
In every case, correct?
I would have to check my records to be absolutely sure of that.
Well, you would remember, wouldn't you, if you testified for some other entity?
Again, I've testified for over 30 some years. I don't think I would remember that. I'd have to review my records.
All right. Those are all the questions I have. Thank you.
Thank you, Commissioner Irvin. Commissioner Thomas.
Thank you. Dr. Vanderweed, you certainly have a lot of experience. Quite impressive. So let's see. You have come up with an exact number of 10.25% for your ROE. And, the other witnesses have come up with ranges. Have you ever, do you recall, have you ever presented a range, and do you think it's ever appropriate to present a range?
I believe I have presented a range. I usually present, in fact, just to be clear, I usually show a range and then make a recommendation within that range. But sometimes I believe that I have recommended a range, but not often, without recommending a point in the range.
Okay, thank you. So you have indicated that you've used market value, not book value, for equity in some of your calculations. Yet Dominion Energy South Carolina has not traded publicly for a little while. So I assume then that you are working from the parent company to get a market value?
I'm looking at the average market value of my comparable companies, which necessarily are traded publicly because that's how we estimate the cost of equity, is by looking at capital market data. And so the sample companies have to be publicly traded, and these are all the publicly traded, or nearly all the publicly traded value line electric utilities that I use to estimate the cost of equity and apply that to DESC. Okay.
All right. So you say that interest rates are unreasonably low due to COVID. However, they've been trending down for probably about a decade. And so what makes you think that rates will go up so much higher when things return to normal?
Well, the reason is that the federal government is incurring unbelievably large deficits at this time in order to ameliorate some of the effects of the COVID crisis. But those large deficits are going to have to be paid back at some point in time. And that's going to have to be at a higher interest rate. I noticed that even since they began that program, interest rates have gone up somewhat. And I don't think there's any doubt that they will continue to go up because of those large deficits that they're incurring right now and are projecting to continue to incur.
Well, theoretically, I would have to agree with you on that. That's been said for a long time. But in any event, so recently Dominion Energy South Carolina issued about $1 billion at the range of 4.25% to 4.6%, and yet you're using 6.46%. So I assume that that's in part due to the outstanding old debt at higher rates combined with your future expectations. Is that correct?
Well, the 6.46 was contained in the testimony of the company witness, and I accepted that as the cost of equity. Cost of debt, sorry.
Okay. All righty. So let's see. You indicated again that you testified in over 500 rate cases, and usually on behalf of a utility. So in your past history, usually your ROE recommendation come down somewhere in the middle range of the intervening parties, or are you usually a little higher, usually a little lower? Can you make a comment on that?
I don't think I have a comment on that. My testimony is what it is. It's my recommended cost of equity, and I don't make any attempt to put it within a range of anything that someone else has recommended.
Okay. But I think you just also stated that you basically never testified on behalf of a consumer advocate. You're pretty much there testifying for utility companies. Is that what I understood you say a little while ago?
Well, let me clarify. When I say I've been in over 500 proceedings, some of those were not rate proceedings. They were general issue proceedings, or they were court cases, or cases before, say, the Supreme Court of New York or other jurisdictions. They didn't always involve a cost of equity estimate. But with respect to those that did involve a cost of equity estimate, and sometimes they were in response to general questions about various models, such as perhaps the FERC had a general proceeding that didn't require an estimate but had opinions about how to estimate the cost of equity. But in cases where I did provide an estimate of the cost of equity, it was generally on behalf of a utility, yes.
Okay. I appreciate your help. That's all I have.
Thank you.
Chairman Williams.
Commissioner Caston.
Good morning, Dr. Van der Weide.
Good morning.
I guess just to start, as a private consultant, whether you want to work with just public utilities or whomever you want to work with, that's your business and I'm fine with it. Couple of questions. These models, and I actually did look at some of the equations and tried to follow them, and I gave up. But the discounted cash flow, ex ante risk premium, ex post risk premium, the, let's see, capital asset pricing model, I think you used historic and forward looking, the comparable earnings models. Are all of those models generally acknowledged and generally accepted?
Yes, they are.
I think it was Attorney Medlin, I'm not sure. I guess did not concur on one of those, I think the comparable earnings model. And I think that was a concern at least to witness Woolridge. But I guess time will tell. On page 4 of your direct testimony, I think, let's see, line 21. I'll read it if you wish.
Okay.
Because these inputs can only be estimated, there is naturally some degree of uncertainty surrounding the estimate of the cost of equity for each company. And then going back to line 18, same page, I, being you, estimate DESC's cost of equity by applying several cost of equity methods. And I won't finish the sentence, you can. I guess just reading that and my understanding of it is, in essence, all of the inputs in all of these models are variables that are estimated and are the modeler's opinion. Is that correct?
Yes, it is. But I guess I would clarify that those opinions are not random opinions. They're supported by evidence generally.
Yes, sir, I understand.
Testimony.
Everyone has opinions, don't they?
Do.
Let's see. Bear with me here. You know, I was looking at the information on proxy groups also, and as I understand, proxy group is looking at similar like-kind entities to compare relative to these models. Is that correct?
Yes, it is.
Are these proxy groups generally acknowledged and accepted by folks who do this for a living, use these models?
Yes. Virtually everyone that I've ever seen, I can't think of a case where they haven't, uses a group of publicly traded companies, and generally that are in the same industry as the companies whose rates are being set. And the reason for that is that because there's some uncertainty in the estimate of the cost of equity for an individual company, one seeks to reduce that uncertainty by estimating the cost of equity for a larger group of publicly traded utilities.
If we're typically using the same proxy group throughout the course of time, is there perhaps a chance that it could be a self-fulfilling prophecy that we make these things what they are? Is it still valid to look outside of that proxy group?
And I can think of cases where it might be valid to look outside of that proxy group. In the case of electric utilities, we have quite a large number, in the mid-30s, publicly traded electric utilities followed by Value Line. And so there's not much need to move beyond that proxy group of electric utilities.
Okay. Well, thank you. Thank you, Doctor. Appreciate it.
Commissioner questions?
Mr. Chairman.
Commissioner Powers?
Thank you, Mr. Chairman. Dr. Vanderwaard, thank you for your testimony today. There seems to be a lot made of your use of financial risk could you give me a definition of business risk and how that may differ from financial risk?
Yes. Business risk refers to the uncertainty in the company's revenues and expenses that might be associated with uncertain demand or use of electricity, uncertain expenses that are not known at the time and could change. Financial risk has to do with the risk that is associated with the company's capital structure, and especially the risks that are experienced by equity investors when they invest in the company's equity. And the reason I look at market value capital structures to measure financial risk is that equity investors are primarily concerned with the variance of return or the volatility of return, the swings up and down in the prices of their stock investment. And the up and down swings in the stock price and the volatility of return to the investor depends on the market values of equity, not the book values of equity, because you can only buy and sell stocks at market price. And the risk of investing in the stocks is that the price could go up or go down. And so the financial risk adjustment is meant to reflect that fact that the equity investor's risk is based on the market value of equity and the market value of debt, and not the book values. And that's the fact that financial risk depends on the market values is widely known. I've taught finance for over 35 years at Duke and many other years in executive education. I have never seen a financial textbook that suggested that financial risk should be based on book values. They have all suggested that financial risk is based on the market values of debt and equity and have to be measured by the market value capital structures of companies.
Well, as far as a company's business risk, does that really depend on the level of the debt financing there's so much talked about? Or really doesn't a business risk depend on the business decisions that the executive team or executive board makes? Other factors?
I can see how you might combine what I have called business and financial risk into a total business risk. But generally, when we define business risk, we're talking only about the company's sales and expenses, the revenues and expenses from their operations, not the risk associated with their capital structure, their debt and equity financing. The risk associated with debt and equity financing is usually distinguished by use of the phrase financial risk, so that it can be differentiated from the risk of the business itself.
Well, you talked about a lot of other risks in your testimony, the technological advances, the regulations, as far as energy consumption and other things. I just wonder why there's such a concentration on the financial risk in your determination of what the return should be.
Well, it's because the business risks are already reflected in my cost of equity estimates, and the financial risk, as I've suggested, is based on the market values of the debt and equity, because the marketplace prices change every day, and hence the risk of investing in the equity depends on market values. However, the capital structure in this proceeding and in most regulatory proceedings is based on a book value of debt and equity that contains less equity than the market values of debt and equity. So the book values might be relevant for the financial risk associated for a debt investor, but are not the appropriate measure of financial risk for an equity investor. So in my cost of equity recommendation, to reflect the risk of the equity investor, I include this financial risk adjustment.
Okay. Thank you, Doctor. That's all I have.
Chair Williams, could I do a follow-up?
Yes, sir. Commissioner Caston.
I apologize, Dr. Vander. Why I had a question I meant to ask. Are you still there?
Yes, I am.
On page 6 of your testimony, lines 9 through 12, where you were talking about the proxy group has less financial risk than a DSC.
The DESC's recommended rate-making capital structure.
Repeat that.
It has less financial risk than DESC's recommended, than that which is reflected in DESC's recommended rate-making capital structure. That's on line 6 through 10.
Okay, thank you. How much higher, I guess in other words, the exact percentage of debt financing does the proxy group you use compared to DESC's?
Well, DESC's rate-making capital structure, if I recall right, has 53.35% equity, and the capital structure in the marketplace of my proxy companies, based on the financial, based on the market prices, has over 60% equity. At the time of my testimony, I believe it was about 63% equity. And so in the marketplace, the capital structure has a higher percentage of equity and hence has less risk than the recommended book value capital structure. And that means that in my cost of equity estimate, there is less risk than what it's actually reflected in the company's book value capital structure. And so an adjustment is required to incorporate the correct risk in the recommended cost of equity.
Thank you very much.
Any more commissioner questions?
One follow-up, Mr. Chairman.
Commissioner Irvin.
Thank you. Doctor, I meant to ask you earlier, how many times in the 550 or so times that you've testified, how many times have you testified for Dominion?
Not very often. I haven't testified for Dominion for many years. I believe I did earlier in my career, but I have not testified for them recently.
How about in the last 5 years?
I have not testified for them in the last 5 years.
All right. Is a beta an indicator of a stock's volatility?
Yes, it is.
Would that be something you consider in your evaluation?
I do consider it in my capital asset pricing model, and the risk that's included in the beta is both business risk and financial risk, and that's again based on the market value capital structure of the company. That is, the beta measures the variability in the market values of the company compared to the overall market.
That's right.
Not the book of equity.
Yes, sir. That's correct. And would it surprise you to know that Dominion's beta currently is 0.79, which means it's less volatile than the general market?
Well, that's Dominion. I think the average for my proxy group is more like 0.83, a little bit above that. But there's also evidence that the actual returns tend out compared to the CAPM estimated returns tend to be a little bit higher for companies that have betas less than 1 than are predicted by the CAPM. And so for companies with betas that are less than 1, there's a slight understatement of the cost of equity, a somewhat understatement of the cost of equity. But I don't really adjust for that. I just note it.
Thank you, sir. Those are all the questions I have, Mr. Chairman. Thank you.
Any more commissioner questions? Sir, I have a quick clarifying question for you, if I may.
Sure.
Is your recommended ROE 10.4 or 10.25?
Well, let me just explain. In my direct testimony, I estimated a range for which 10.4 was the midpoint. And then in my rebuttal testimony, my cost of equity results, the average cost of equity results, went down by about 10 basis points, so that rather than 10.4 average, it went down to 10.3 average, which, recognizing there's some uncertainty about that, I believe it supports the company's recommendation in this proceeding. It's very, very close to the 10.25.
Understood. But your recommendation is not 10.25.
The results of my studies is 10.3, and I would recommend that 10.3 is a very reasonable cost of equity. The company explains why it chose 10.25 based on its, if I recall right, its last allowed rate of return. But certainly there's a lot of evidence to support that 10.25 as being reasonable.
So your testimony is 10.25 is reasonable?
Yes.
What about 10.1?
It seems to me that there is a range, but the most likely estimate, in my opinion, would be 10.3. 10.25 is very, very close to 10.3. As we move a little bit farther away, such as 10.1 or 10.4, we start to move away from the most likely estimate.
Understood. But your testimony today is that there is indeed a range of reasonableness. It does not have to be just 10.3 as you recommend. The company could come back with 10.25, or it could be as low as 9.8 or even lower, within the range of reasonableness. Is that your testimony?
I think the most likely range of reasonableness would be something like around 10.3, and be something like 10.1 to 10.5, but it would be equally likely to be above as below the 10.3. So my best estimate would be 10.3.
Thank you, sir. If there are no more commissioner questions, Attorney Willoughby, redirect.
Thank you, Mr. Chairman. We have no redirect, and we would ask that Dr. Van der Weide be excused.
Dr. Van der Weide, you are excused. You may step down for the witness stand.
And I have the opportunity to testify.
Yes, sir.
Thank you, Dr. Van der Weide, for your testimony.
You're welcome.
Attorney Eaton,
Yes, sir.
could you spell your name for me?
Eaton.
Okay. So apparently there's some correspondence that has your name misspelled. So if you see that, please accept. My apologies. I don't know who misspelled it, but apparently I just got a note. There's some correspondence that there may be a typo in DMS with your name.
Okay.
All right. Is the applicant ready to call this next witness?
We are, Mr. Chairman. We will call next to the stand Mr. Stephen Fetter. Mr. Fetter, would you turn on your video? There you are. Good morning, Mr. Fetter. Is your audio working?
Good morning. Do you hear me?
I hear you loud and clear. Mr. Chairman, do you hear Mr. Fetter?
Loud and clear, sir.
Perfect. Thank you, Mr. Chairman. Good morning, Mr. Fetter. And would you please state your name for
Attorney
the record?
Willoughby,
Yes.
would you please allow our court reporter to swear the witness?
Perfect. Will do.
Do you solemnly affirm the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you very much.
Thank you. Now, Mr. Fetter, would you please give your name for the record?
My name is Stephen M. Fetter.
And by whom are you employed, Mr. Fetter, and in what capacity?
I have my own energy advisory firm called Regulation Unfettered, and I'm the president of that entity.
In connection with this proceeding, Mr. Fetter, did you cause to be prepared and pre-filed rebuttal testimony consisting of 27 pages?
Yes, I did.
Are there any corrections or changes to be made to that testimony here today?
Not at this time.
If I asked you the questions that appear in that pre-filed rebuttal testimony, would your answers from the stand today be the same?
Yes, they would.
Mr. Chairman, we would move the introduction into the record as if given orally from the stand, the pre-filed rebuttal testimony of Stephen M. Fetter.
The pre-filed rebuttal testimony of Mr. Fetter will be entered into the record as if given orally from the stand.
Thank you, Mr. Chairman. Mr. Fetter, did you also have attached to your pre-filed rebuttal testimony one exhibit?
Yes, I did.
Are there any corrections or changes to be made to the exhibit?
Not at this time.
Thank you very much. Mr. Chairman, we would move the introduction as the next hearing exhibit, Mr. Fetter's Exhibit 1 attached to his rebuttal testimony.
Mr. Fetter's Exhibit 1 attached to his rebuttal testimony will be marked and entered into the record as hearing exhibit number 22.
Thank you, Mr. Chairman. Mr. Fetter, have you prepared a summary of your rebuttal testimony?
Yes, I have.
Would you please provide that to the commission and the parties at this time?
Yes, I will. Good morning, Chairman Williams and members of the commission. I did not submit direct testimony in this case, but I did present rebuttal testimony on behalf of Dominion Energy South Carolina, or DESC. I bring a unique perspective to this proceeding, which I believe can be helpful to this commission. As shown in Rebuttal Exhibit SMF-1, I served on the Michigan Public Service Commission for 6 years, the last 3 as chairman, and I was reappointed as chairman. I left the Michigan PSC in 1993 to accept a position with Fitch, Inc., one of the three major credit rating agencies, and Fitch is based in New York and London. At Fitch, I was hired to be a utility regulatory analyst, but I rose to become group head and managing director of the utility ratings practice, where I managed an 18-person utility team responsible for credit research and the rating of fixed income securities. Using those unique and directly applicable experiences, I have filed rebuttal testimony on behalf of DESC to respond to certain issues raised in opposing witness testimony related to credit ratings, capital structure, and prudence standards. In my rebuttal testimony, I explain credit ratings and why they are important for electric utilities such as DESC. Specifically, I respond to the capital structure recommendations of South Carolina Department of Consumer Affairs, or DCA, witness Aaron Rothschild, Office of Regulatory Staff, or ORS, witness J. Randall Woolrich, and Dr. Zhen Zhu, testifying on behalf of the U.S. Department of Defense, or DOD. I also respond to the testimony of DCA witness Scott Hempling, Esquire, when he describes a regulatory paradigm that does not exist in South Carolina, but nonetheless, he encourages the Commission to act upon the ideas for which he advocates. And I respond to the testimony of ORS witness Lane Collin, who calls for denial of 0.90% of the cost of long-term debt related to the early redemptions of long-term debt following this Commission's approval of the Dominion Energy SCANA merger. Credit ratings are independent judgments of the general creditworthiness of an obligor, such as an electric utility, or of a specific debt instrument. A utility's credit ratings have a significant impact on its ability to raise capital on a timely basis and upon reasonable terms. A higher debt level negatively affects a regulated utility's credit profile, which in turn can impact that utility's credit ratings and cost of capital. DESC's corporate...
Steve,
Yes,
let me interrupt you one quick second. Mr. Chairman, I'm going to, Steve is continuing with his summary. I'm going to show a chart that he, from his testimony, that he is going to discuss at this point, and I just think it would be useful to share my screen if I can do that. So I'm going to try that now. Can you see that, Mr. Chairman?
Yes, if you could. Yes, sir. If you could blow it up just a little bit.
Okay. Let's see if I can. So what would I do, Darlene?
If you go up where it says 95.5% and make that bigger, in the little box on the top row, you can make it bigger by, up. You see 95 point, there you go.
There we are. Is that better, Mr. Chairman?
Yes.
Perfect. Sorry for the interruption, Mr. Fetter. If you would pick up and continue.
Okay. DESC's corporate issuer credit ratings, as shown on the chart, span between the top level of the BBB category. They are BBB plus at S&P with a positive outlook, and also that same rating at Fitch with a stable outlook. And it goes down to the middle of the BBB category, which is Baa2 at Moody's with a stable outlook. I have long testified that a regulated utility should endeavor to hold ratings no lower than Baa1, BBB+, with a longer-term goal of moving into or maintaining in the A category. I believe that this is important because an electric utility must have the ability to access substantial amounts of debt and equity on a near daily basis to fund its ongoing operations, including capital investments. Significantly, a regulated utility is required to raise funding even if the markets are in turmoil and costs are escalating wildly. Strong credit ratings limit the negative effects of having to finance during times of great volatility within the capital markets, as was seen back during the 2008-2009 recession, when regulated utilities within the BBB category ratings were subject to significantly higher interest rates than A-rated utilities, along with stricter financing terms and more restricted access, if available at all. Accordingly, I encourage both the Commission and the company to seek to achieve BBB+, Baa1 credit ratings across the board at all three agencies once this proceeding has concluded. I note that among qualitative factors underlying credit ratings, regulation is a key factor in assessing the financial strength of a utility because, unlike for almost all other entities obtaining financing in the marketplace, a state public utility commission determines revenue levels that would cover recoverable expenses, including depreciation, operations and maintenance, fuel cost recovery, and return on investment, and also the terms and conditions of service that affect a utility's cost of service. I also note that the concept of prudency is an important factor in the context of utility regulation because a utility's management should be afforded the benefit of the doubt and its decisions presumed reasonable unless proven otherwise. And I note the existence of the regulatory compact, which grants a utility a protected monopoly in return for meeting customer demand at a price calculated to cover the utility's operating costs, plus a reasonable return on capital invested in public service. I explained the concept of constructive utility regulation, which aligns the seemingly competitive interests of utility investors and utility customers in a manner that is consistent and steady over time, so that all parties have reasonable expectations about how regulatory policy will be effectuated. Importantly, this concept supports a utility's ability to provide safe and clean utility service to its customers with a high level of reliability at reasonable rates. The rating agencies have focused on regulation in South Carolina. Moody's, which maintains the lowest credit rating on DESC, sees positive regulatory movement based on the state's improving political and regulatory environment. S&P, which rates DESC one notch higher than Moody's with a positive outlook added on, cautions that lower ratings could occur if management of regulatory risk in South Carolina does not consistently improve. S&P states that DESC's ratings could improve if the company is able to improve its regulatory relationship and outcomes within South Carolina. And Fitch maintains an issuer rating on DESC of BBB+ with a stable outlook and agrees with S&P and Moody's that a favorable outcome in this case may result in higher ratings, but that lower ratings might result from unfavorable political and regulatory developments. Importantly, the key assumptions Fitch has factored into its current BBB+ stable rating are, quote, maintenance of DESC's capital structure in line with regulatory capital structure, and a constructive 2021 base rate decision. With respect to the testimony of witnesses Rothschild and Woolrich regarding their 50% equity and 50% debt capital structure recommendation, and the testimony of Dr. Zhu recommending a capital structure of 52.56% equity and 47.44% debt, I explained that requiring the company to move to either structure would impact the minimum BBB+ Baa1 credit rating I recommend for utilities. I testify that the company's proposed capital structure at 53.35%, 46.65% equity debt, only 79 basis points above Dr. Zhu's recommendation, is deserving of Commission support in that A, it is based upon current actual data, B, company maintenance of that level would be consistent with rating agency assumptions, as recently noted by Fitch, and C, such increment in equity level should allow for continued improvement in the company's credit profile with a goal of the Moody's rating joining S&P and Fitch at the BBB+ Baa1 level. I also explained my disagreement with ORS witness Collins' recommendation to deny 0.90% of the company's cost of long-term debt. In my opinion, the early redemptions of debt about which he complains are important to the company's capital structure and credit ratings, both of which the Commission stated should be targeted for improvement following its approval of the merger. The early redemptions increase the company's equity percentage, which in turn improved the company's credit ratings, but not yet to the level I believe that a utility should target. I further note that Commission rejection of the company's actual cost of long-term debt would not help DESC to achieve that appropriate level. Finally, I discussed my disagreement with DCA witness Hempling's recommendation that the Commission reject the foundational prudency concept with respect to DESC. Again, the principle that prudently incurred costs should be recovered in rates is fundamental to the regulatory compact that undergirds investor expectations. Contrary to his recent protestations, Mr. Hempling seems to suggest that management decisions must be perfect. I disagree. Management judgment is prudent if it falls within a range of reasonable behavior measured under the then current circumstances. It does not have to be perfect, and it is not appropriate to measure such decisions based upon 20/20 hindsight. There can be more than one prudent alternative. In my opinion, rejection of the foundational principle of prudency underlying rate making, as DCA witness Hempling seems to suggest in his direct testimony, would impair the company's credit rating and the interest of investors in funding its operational needs. In conclusion, I believe that utilities and their regulators should strive to attain corporate issuer credit ratings no lower than BBB+ Baa1 with a longer range strategy of achieving ratings within the A category. Accordingly, I encourage the Commission to provide an ongoing, constructive regulatory environment for DESC. Such positive regulatory environment, coupled with DESC providing excellent operational performance, should allow the company to strengthen its credit profile after conclusion of this proceeding. Furthermore, I believe that this case should be decided upon the laws, rules, and regulations as they exist in South Carolina today, and not upon ideas that, if adopted, would certainly result in the company's cost of capital being increased, if capital would even remain available within such a changed regulatory environment. This concludes the summary of my rebuttal testimony. Thank you.
I'm going to thank you, Mr. Fetter. I'm going to stop sharing, and I'll take that exhibit off. And Mr. Chairman, Mr. Fetter is available for cross-examination or questions from the parties and from the commission. And I might say, commission, Mr. Chairman, we've said this in our written filings. As the commission knows, we moved to strike certain testimony of Mr. Hempling. The commission has taken that motion under advisement to rule on it at a later time. We tendered certain testimony from Mr. Fetter in opposition to some of the information that Mr. Hempling had tendered, and we certainly do so in the context of this case, fully reserving our rights and not waiving our rights or waiving any of the arguments that we've made in our motion to strike various portions of Mr. Hempling's testimony. And with that statement for the record, Mr. Chairman, the witness is available for questions from the parties.
Thank you. AARP.
Mr. Chairman, Adam Prothero for AARP. We have no questions for this witness. Thank you.
Walmart Incorporated.
It's Stephanie Eaton for Walmart. We have no questions.
Sierra Club.
Sierra Club has no questions. Thank you.
United States Department of Defense and all other federal agencies, federal executive agencies.
No questions.
Frank Knapp, Jr. South Carolina Coastal Conservation League and Southern Alliance for Clean Energy.
Thank you, Mr. Chairman. We have no questions.
South Carolina Energy Users Committee.
No questions of this witness, Mr. Chairman. Thank you.
South Carolina Department of Consumer Affairs.
We have no questions, Mr. Chairman. Thank you.
Office of Regulatory Staff.
Thank you, Mr. Chairman. Just let me bring my video up. We do have a few questions.
Please
Good morning,
proceed.
Mr. Fetter. Thank you, Mr.
Good
Chairman.
morning.
Of course, your testimony discusses credit rating agencies. And question, is your position in your testimony that the main responsibility of the commission is to make credit rating agencies happy?
No, but I thought that the commission did a good job when it laid out in its merger approval order that increasing the equity level and also credit ratings, I thought that was good public policy. And in my mind, they've achieved most of what they set out to do, and Moody's rating remains at Baa2. Moody's is either the most important or the second most important credit rating agency on Wall Street. And I think taking steps to be financially supportive and bring up that rating at least to the Baa1 level would be a positive step for the commission and the company and customers and the investment community.
But you agree that the commission has a wider range of responsibilities than just focusing on how credit rating agencies might view its decision.
As I said, credit ratings are very important. When I was chairman of the Michigan Commission, we would meet with all stakeholders on a regular basis, from consumers at forums and to going to New York to meet with credit rating agencies to understand the interest and of everyone involved in the process. And so I think credit ratings are important. They affect not only investors, but they also affect the cost of service to customers.
Thank you, Mr. Feder. No further questions.
Thank you.
Commissioner questions?
Mr. Chair Williams.
Commissioner Caston?
Good morning, Mr. Feder.
Good morning, Commissioner.
I was looking at, I guess your experience among other things, quite an experience you have. With Fitch, reading it, were you actively involved with any specific credit ratings for entities?
Well, the way the group was structured, I was brought in to be a regulatory analyst on all the utility companies that we rated, and then other of the analysts would have a group of utilities assigned to them. And so ratings are done within a rating committee, and so the analyst who had that utility assigned to him or her would come and make a presentation, and then the rest of us on the committee, including myself, would offer our views. I would chime in on regulation and legislation, and then the committee as a whole would determine the appropriate credit rating. And then over time, about halfway through my 8.5-year tenure, I was made the group head and managing director of the entire team in New York and Chicago.
As you probably know, I'm one of the newbies on the commission. In a previous role I had, I was involved with the utility. It was not an investor-owned utility. But we did a credit rating for the first time, we'd had one, I think maybe 2 or 3 times while I was there. Moody's, Standard & Poor's, and I think Fitch. So that was all a new experience for me also. I must be honest, my personal experience with that was, it kind of was up to us. I mean, no one really helped us. We either instilled confidence because of the way we ran the utility, our debt. They liked the idea that we had little to no debt. They liked the idea that we were a well-run utility and checked the boxes that make you feel good that pretty solid, sound utility. I certainly think it's not our role to, not the commission's role to do anything to intentionally hurt anyone's rating, but at the same time, I'm not sure it's our role to just assist in that. It's to be just, reasonable, prudent, as you say. One of the things I keep coming back to, and I'm not saying that they are efficient or not efficient, I think it is paramount for the utilities to make sure they're running a really efficient operation, a really good operation. Those things matter. Now, if you can keep getting rates and rate increases, and that's certainly something that will, I would think, help a rating. But I guess as I look through this stuff and I think about this stuff, still pretty interested in all of the things that I'm hearing, all the things we're discussing, but still the responsibility for the utility to really run an efficient utility. Not saying they aren't, but just saying that you are versus showing that you are is important. Do you agree?
I do, Commissioner Caston. I noted in my summary, tied in with sustained positive regulation or constructive regulation, was excellent operational performance. I agree 100% with you. It's a two-pronged process where the commission provides appropriate support and the company does all it can to run in an excellent manner, including, as you say, efficiently. And I think it takes both sides of the equation to end up leading to the credit rating level that I think is appropriate. The minimum level being the BBB plus Baa1. And I think it was, I give credit to the commission in its merger order in prioritizing the importance of the equity and the credit rating level, because over time it has borne fruit. And I think it helps not only investors, but most especially customers who end up paying for the cost of financing.
I agree, which is all the more reason for any utility to be as efficient and effective as they can, because that cost is always passed on, good or bad, to the customer. For what it's worth, the utility I was with, we were, I think, AA3 and AA minus, which at the time that meant absolutely nothing to me. You know.
Well, now you'd be one of the best on the whole slate.
But that said, it's what it was. But again, my personal experience was that these things came about because of the efforts of the leadership at our utility, doing the right thing the right way for the right reasons, and in time, it proved to be effective. It's possible, at least in some cases, not to go up on rates for 24 years, using technology, strategy, and a host of other things. So, again, I'm not debating whether Dominion is or is not that way. I don't know. But again, I think it is important. Excuse me.
Yeah. Over time, you'll have to make that assessment, Commissioner.
Yes, sir. So I agree with you. I think it's important, and I think these ratings are important. But I think it's more important for the utility, all utilities, to do the job to get that rating higher by just being real good at what you do and being real efficient and lean. Metrics matter. Thank you.
I agree with you, Commissioner. Thank you.
Commissioner, questions for this witness?
Mr. Chairman, Commissioner Thomas.
Commissioner Thomas.
Thank you. Mr. Fader, appreciate you being here and helping us understand this. So just a quick question for you. What do you think is about the lowest range that the equity component of the capital structure could be and not run into going below investment grade? Do you have an opinion on that?
Well, I guess now it looks like it's at, dating back to the 2012 case, rates were set on 52.18, and then there was a added a portion of rates based on some of the nuclear recovery at 52.81, which to me ends up about 52.5, and that has, in my mind, that has brought it up to where the credit rating levels are today, slightly below where I think they should be. And so I thought the commission filing at 53.35 would probably bring the credit ratings all up in tune at the top of the BBB category. I think Dr. Zhu coming in with a recommendation, I think 52.56, he's pretty much tracking what it is today. And so I'd say that would, in my mind, that would be the bottom of the appropriate range. I think to go to 50-50 like Mr. Rothschild and Dr. Woolrich would undo some of the beneficial policies that the commission has carried forward the last couple of years.
Thank you. Appreciate that input. That's all I have.
Thank you, Commissioner. Thank you.
Any more commissioner questions? Redirect.
Mr. Chairman, we have no redirect questions to ask of this witness.
All right. Mr. Feder, you may step down from the stand and be excused. We're going to take a 12-minute break.
Thank you, Mr. Chairman.
Ladies and gentlemen, we're back on the record in docket number 2020-125E, Dominion Energy South Carolina's application for rate adjustment. Before we get started, we're going to have a roll call of commissioners to make sure everyone is with us, starting with District 1, Commissioner Williams.
Present virtually.
Vice Chair Belzer.
Present in the hearing room.
Commissioner Caston.
Present in the hearing room.
Commissioner Irvin.
Present virtually.
Commissioner Thomas.
Present virtually.
Commissioner Powers.
Present virtually.
Chairman Williams is present here in the hearing room. All right. Attorney Willoughby, please call your next witness.
Mr. Chairman, Belton Ziegler, representing Dominion Energy South Carolina. The company would call Scott Parker to the stand.
Mr. Chairman,
Yes.
I was curious as to whether or not Dominion is ready to respond to ORS's request to stipulate certain testimony to try to make better use of our time.
Mr. Chairman, I would defer to Mr. Willoughby or Mr. Burgess on that point.
Attorney Willoughby, Attorney Burgess.
So, Mr. Chairman, I got disconnected 1 second. Would you inform me what the question is?
Have you responded to ORS's request to stipulate to certain witnesses? Testimony.
I wish to talk with them at the lunch break, Mr. Chairman. I think there are some things that we can agree to. They had suggested 4 witnesses, and I expressed some concern last night when I talked with Andrew. But there may be a way that we can stipulate to 3 of the witnesses. But I'd like to do it. I'd like to have that conversation at the lunchtime hour, if I may, Mr. Chairman.
All right, Attorney Bateman.
And Mr. Chairman, I might also indicate this would be dependent upon, it's always whether or not the commission wishes for those witnesses to be at least available for commission questions. So that would be always a contingency. I think Mr. Bateman's proposal was that their testimony be stipulated and they wouldn't even appear at all in the hearing. And we certainly want to make sure that the commission has a chance to ask questions of any witness if they have questions that they wish to ask.
Certainly, Mr. Chairman. This is Andrew Bateman with ORS. We wholeheartedly agree. It's up to the discretion of the commission. And if the commission's amenable for Mr. Willoughby and myself to discuss this at lunch, ORS has no objection with that.
Well, who are you proposing stipulating to the testimony?
Mr. Chairman, last night when I discussed this with Mr. Willoughby, we discussed the stipulation of the testimonies of witness Spanos for the company, witness Long for the company, witness Sandinato for ORS, and witness Brazino for ORS.
All right. Thank you very much. Please proceed, Attorney Ziegler. I'm sorry.
Chairman, I believe the witness needs to be sworn in and we'd be ready to go.
Chair Williams, can you hear me? This is David Neal on behalf of SACE and Carolina Coastal Conservation League.
Yes.
Just wanted to put on the record that another suggestion that we made to the parties and that I have not heard a response to speed things along would be to bypass the oral witness summaries and to have the parties prepare written summaries that are circulated the day before their witnesses appear. I think that would be another way to move things along in this hearing that I would like considered. Thank you.
Okay. We will definitely take that under consideration, and I hope that you all would discuss all of the courses of action over lunch and present them thereafter for commission consideration. All right, Attorney Ziegler, please Proceed.
Yes, Mr. Chairman, we've called Scott Parker to the stand and are awaiting his swearing in so that he may begin his testimony.
Thank you, sir.
Mr. Parker, if you would raise your right hand, please. Do you solemnly affirm the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Thank you very much.
Please state your name for the record.
Scott Parker.
By whom are you employed and in what capacity?
I'm employed by Dominion Energy South Carolina as the manager of transmission planning.
And did you prepare or cause to be prepared under your supervision and direction some 30 pages of rebuttal testimony that was filed with the commission in this proceeding?
I did.
Do you have any changes or additions to that testimony?
Yes.
Could you please state the changes for the record?
Yes, on page 9, starting on line 15, the sentence that reads, their capability as measured in impedance and amperage is approximately double that single conductor lines, should read their current carrying capability is approximately double that of single conductor lines, while their impedance is reduced by over 30%.
With these corrections, well, let me ask you this. Has your corrected testimony been filed with the commission in this matter?
Yes, it has.
Other than that correction, if I ask you the questions that are contained in that testimony today, would your answers be the same?
Yes, they would.
Mr. Chairman, at this time I'd move that the pre-filed rebuttal testimony of Mr. Parker be entered into the record as if given orally from the stand containing the corrections filed today.
The pre-filed rebuttal testimony of Mr. Parker will be entered in the record as given orally from the stand with the corrections as identified today.
And Mr. Parker, I believe there's one exhibit labeled RSP1 that's attached to your rebuttal testimony. Is that correct?
Yes, it is.
Are there any changes required to that exhibit?
No.
Mr. Chairman, I'd move that the exhibit RSP1 that's attached to Mr. Parker's pre-filed rebuttal testimony be entered into the record as part of this proceeding.
Exhibit RSP1 will be marked and entered into the record as hearing exhibit number 23.
Mr. Parker, have you prepared a summary of your rebuttal testimony?
Yes, I have.
Mr. Chairman, I would note that there is one slide accompanying Mr. Parker's summary. It is a graphic that was included in his pre-filed testimony, and so at the appropriate point I will share that with the parties, but it is part of that pre-filed testimony. So, Mr. Parker, would you please present your summary at this time?
Okay. Good afternoon, Chairman Williams and other commissioners. In addition to my role as manager of transmission planning, I am currently a representative on the Southeastern Reliability Corporation, or CERC, Engineering Committee and Planning Subcommittee. I am also the current chair of the Carolinas Transmission Coordination Agreement Power Flow Study Group and a member of the Eastern Interconnection Planning Collaborative Technical Committee. All of these committees are directly involved with assessing the current and future capabilities of the integrated transmission grid in North America, the Southeast, and the Carolinas. As manager of transmission planning, I am responsible for the engineers who prepare the planning and analyses of the company's electric transmission system to ensure compliance with required planning and reliability standards and criteria. It is our duty to ensure the safety, reliability, adequacy, and cost effectiveness of the internal transmission system, as well as the interconnection transmission facilities with neighboring utilities. In my testimony, I provide a detailed explanation of why the NND transmission projects are every bit as used and useful today as they were when they were planned in 2008. These explanations are backed up from studies we have done, approved models shared by all electric utilities, and published coal plant retirement and planned retirement. My testimony further explains why these transmission upgrade projects are critically important to our ability to serve our customers reliably and to meet our NERC planning and reliability obligations. Geography is important here. The company's transmission system is divided into a northern and southern region. The northern region includes Aiken, Orangeburg, Columbia, Lexington, Lake Murray, Winnsboro, Blythewood, and surrounding areas. The southern region contains the South Carolina Low Country, including the greater Charleston, Walterboro, St. George, and Beaufort areas. The company's transmission system links these northern and southern load centers and allows power to flow reliably from north to south. Most of the generation capacity on our system is located in the north, and much of that capacity is located north or west of the city of Columbia. In addition, DESC's principal interconnections with Duke Energy Carolinas, Duke Energy Progress, and Georgia Power are located in that northern region. Certainly, the genesis of the planned transmission projects associated with the new nuclear facilities was the proposed interconnection of those nuclear plants into the DESC system. However, early studies maintained that a key driver for the need for the new transmission facilities, specifically the St. George 230 kV lines, was the ultimate imbalance of generation between the greater Columbia area load center and the greater Charleston area load center. High volume natural gas pipelines have historically been absent along the coast. For this reason, along with limited rail service, constrained land use patterns, and environmental restrictions, relatively little of the company's generation resources are located in the southern region and the Charleston area specifically. The map you see shows the location of our principal generation resources. Of the approximately 5,000 megawatts of such generation, only 771 megawatts are located in the vicinity of Charleston. One coal-fired unit, Williams Station, represents 78% of that capacity. For that reason, the principal power flows needed to reliably serve customers take place along the north-south backbone of the system. Maintaining capacity and reliability there is critically important. The transmission upgrade projects created a reliable 230 kV pathway for power to flow through this corridor. That underlying fundamental aspect of the DESC transmission system is just as critical today as it was when it was envisioned back in 2007, 2008. That pathway is and was needed whether or not new nuclear units were built. In fact, it is even more important today than we could have imagined 13 years ago. In 2008, natural gas prices were roughly twice those of coal on a dollar per BTU heat content basis. Coal was considered to be base-loaded generation, and gas-fired units were shoulder-load type units. Now, coal plants have been shuttered throughout the low country of South Carolina. As I explained in my testimony, gas availability is severely limited down there. The north-south transmission pathway has become even more important as coal plants are retired in this area. The company has retired this 400-megawatt Kennedy's plant near St. George. Santee Cooper has retired Granger Station, a 170-megawatt coal plant located near Conway, and Jeffrey Station, a 398-megawatt coal plant located in Moncks Corner. It plans to retire Winyall Station, a 1,150-megawatt plant near Georgetown, with other low country coal plants possibly following. Because DESC and Santee Cooper systems are interconnected, Santee Cooper's generation dispatch can greatly affect the DESC transmission system and vice versa. The north-south backbone provided by the transmission upgrade projects will be even more critical if coal plant retirements continue to take place. A single combined cycle gas plant needs
as much natural gas as it takes to serve all residential and commercial customers in an area the size of Charleston or Columbia during periods of peak cold weather demand. The Charleston area and much of the Low Country lack such gas supplies, yet are some of the fastest growing areas in the country. There are no plans to construct such infrastructure in the future. Without such supplies, it is not possible to construct new high-capacity gas-fired facilities to replace coal or meet load growth in the region. Rapidly growing load combined with equally rapid reduction in generation is a recipe for problems. Energy will have to be delivered through the transmission system as a solution. Additionally, canceling the NND project did not fundamentally change the company's transmission requirements because the company has replaced generation it was expecting from the new nuclear project with other generation resources in the Columbia area. The company repowered the 250 megawatt McMeekin station, which was up for retirement, as a natural gas-fired station. It also purchased the Columbia Energy Center, a 540 megawatt combined cycle gas plant. Both of these are located along the transmission backbone that was built as part of this project. The need to ensure that generation can be transported to the Low Country from the Columbia area is just as important today as it was when the transmission upgrade projects were planned in 2008. In addition, the transmission upgrade projects are designed to deliver power into the rapidly developing areas around Lake Murray, Chapin, Irmo, and the town of Lexington, and into the Interstate 77 corridor around Blythewood, Killian, and northeast Columbia. Existing lines and substations serving those areas are located in congested urban corridors where expansion is difficult. The new lines are modern, bundled, double conductor lines with approximately double the capacity of most existing lines, while only 70% of the impedance of single conductor lines. Impedance matters because the lower the impedance, the lower the losses and the more power is induced to flow along that corridor. We could not operate the system today reliably or in compliance with NERC standards without these assets. Also, before the upgrade project, much of the north-south power flows took place on a network of 115 kV lines that crossed rural areas serving towns and industries along the way. Using these lines to carry these north-south power flows presented reliability and system control challenges that the upgrades corrected. But an additional benefit of offloading these lines has been to make them available for connecting solar projects in these rural areas to the grid without requiring additional transmission upgrades. The company has verified the value of the transmission upgrade projects to the system using the same models and criteria used to meet its federally mandated NERC reliability transmission assessment and planning obligations. Running these assessments without the transmission projects in place, 37 230 kV lines and 115 kV transmission lines totaling approximately 571 miles would be overloaded or heavily loaded, and 8 high voltage transformers will be overloaded or heavily loaded, totaling 2,352 MVA of transformer capacity. These are major system operating limitations. It is likely that NERC would find DESC to be in serious violation of its responsibilities under federal law. Transmission upgrades of the sort provided by the transmission upgrade projects would be required to correct these problems as quickly as possible. ORS witness Mr. Seaman Wynn and witness Ted McGavran on behalf of the South Carolina Energy Users Committee and South Carolina Department of Consumer Affairs both criticized the transmission upgrade projects for supposedly being underutilized. First of all, this is not a meaningful critique. The goal of transmission planning is to identify which lines would be overloaded or heavily loaded under reasonably foreseeable contingency conditions. That is what NERC reliability rules require. The studies then seek to identify the least cost configuration of new lines or other assets to relieve this overloading. Maximizing the capacity utilization of a new transmission facility is in no way a goal of the transmission planning process. In fact, the high loading of transmission facilities makes the system more unstable and more unreliable. If a highly loaded 230 kV transmission line trips due to a fault or tree or something of the like, all the power it carries instantaneously flows elsewhere, and this can overwhelm the 115 kV system in a moment. Additionally, if all lines are heavily loaded, when one line trips, the power on that one line can flood over to other heavily loaded lines, causing them to trip. The extreme result would be a cascading outage event. For these reasons, transmission systems are not built to operate at or near capacity, either on average or peak days. In addition, designing a line to operate at a high capacity when it goes into service means that this line will have to be replaced or otherwise offloaded when system conditions change. My department would never aim to downsize a line to maximize its capacity utilization. To do so would be contrary to good transmission planning practices. Rather, the goal is to reduce loading on overloaded and heavily loading lines in the most cost-effective manner possible for the long-term reliability, resiliency, and efficiency of the system. Since the issue of utilization of these new lines has been raised, though, it is critical to explain that neither Mr. McGavran or Mr. Seaman-Wynn point to any benchmark percentage utilization of transmission lines indicating underutilization. There is none because capacity utilization has never been a goal of transmission planning. New transmission lines are planned to alleviate overloads on other facilities in the most reliable fashion and in the least cost way possible. We do so while evaluating each solution over a long-term horizon to make sure the proposed solution will meet the needs for many years to come. The fact that a line may have a low capacity utilization does not at all indicate that it is not functioning as intended or providing a vital service to the system by preventing major problems elsewhere. And their criticism does not hold up factually. The peak loading values for the transmission upgrade projects in the test year were 20 to 26%. My group has computed the percentage loading of 230 kV transmission branches across the Eastern Interconnection, which is one of the three major power grids in North America and reaches from Canada down to Florida. For these 230 kV branches, the percentage loading has been consistently around 19% at time of summer system peak. The NERC required modeling runs for 2021 show loading on these branches of 23% across the interconnection and 21.5% for the Southeast. The transmission upgrade projects, in fact, operate at loading levels that are consistent with transmission systems in the region and throughout the Eastern Interconnection. In summary, the transmission upgrade projects are not just used and useful. They are critical to the safe and reliable operation of the company's transmission system. Without the transmission upgrade projects, the system would fail to meet federally mandated reliability requirements today, and the situation would grow progressively worse with time. This concludes the summary of my rebuttal testimony.
Mr. Chairman, Mr. Parker is available for questions from the party, cross-examination from the parties, and questions from the commission.
Thank you. AARP.
Adam Prothero for AARP. We have no questions for this witness. Thank you.
Walmart Incorporated.
Stephanie Eaton for Walmart. We have no questions for this witness.
Sierra Club.
Dorothy Jaffe for Sierra Club. We have no questions.
United States Department of Defense and all other federal agencies.
Mr. Chairman, no questions.
Frank Knapp, Jr.
Mr. Chairman, I want to apologize. I have been on every second of this hearing, both yesterday and today, and I've responded when I thought you could hear me. I'm being told you've never been able to hear me respond to your acknowledgement of me. I apologize for that. So try to do something different here, but thank you. I do not have any questions for this witness.
All right. Thank you. Good to hear your voice. South Carolina Coastal Conservation League and Southern Alliance for Clean Energy.
Thank you, Mr. Chairman. Kate Mixon for Station CCL. We have no questions.
South Carolina Energy Users Committee.
Mr. Chairman, if I may.
Please.
Thank you. Mr. Parker, can you hear me?
I can indeed.
Good. Thank you so much. Thanks for being here and testifying this afternoon. Now, Mr. Parker, you are aware that the transmission lines in question were constructed and financed pursuant to the Base Load Review Act. Are you not?
I believe that's the case. I'm not the expert or that familiar with the financing and all that, but I know that the projects, including the transmission, were a part of the Base Load Review Act.
Right, and you recall that your predecessor, Mr. Young, Hubert Young, testified in the 2008 Base Load Review proceeding, giving the Commission your forecast, the company's forecast of its transmission needs for those two plants. Do you not?
Yes, I do.
And you will recall that at the time, the transmission plans were not certain, and that the company came in again in 2011 seeking authority to construct part of the transmission lines that are in dispute in this case, correct?
Yes, I believe the 2011. Yeah, I'm familiar with those changes.
Yes, sir. And you are aware, because you've prepared for this hearing and you've read the testimony, perhaps specifically the surrebuttal of Mr. Michael Seaman Wynn with the ORS, you are aware that in 2011, in the first proceeding, the Commission made the following finding. SCE&G has shown the basis of the need for the lines in that they are necessary to route the power to be generated by VC Summer Nuclear Station Units 2 and 3 onto its transmission system to serve reliably SCE&G customers in the Northeast, Columbia, Lake Murray, and Lexington areas, and to support reliability during future construction of the St. George Line Number 2, all the while ensuring that SCE&G remains in compliance with applicable transmission system reliability standards. You recall that to be the Commission's finding, do you not?
I believe that's the case. I trust that. I don't have the exact, I don't have that order or testimony right in front of me, but that sounds accurate and in keeping with that hearing and that order.
Yes, sir. Thank you. And then you mentioned the St. George line. You will recall that SCE&G came in a second time in 2012 to obtain authority to build the St. George line. Do you not?
Yes, that's my recollection.
And once again, and for the third time, your predecessor, Hubert Young, testified in support of SCE&G's application. Is that correct?
Yes, certainly.
Yes, sir. And you'll recall, based on your preparation for this hearing, your testimony this afternoon, that this commission found in order number 2012-730, SCE&G has shown the basis of the need for the St. George lines and the St. George switching station in that they are necessary to route power generated by Unit 3 from the VC Summer plant site to those parts of SCE&G's grid that serve the Charleston area load centers and other load centers in South Carolina Lowcountry, all while ensuring that SCE&G remains in compliance with applicable transmission system reliability standards. You recall that to be the Commission's finding in order number 2012-730, do you not, sir?
Yes, that sounds correct.
Now, you testify that there are a number of factors along the system that justify requiring the ratepayers to pay for these lines at this time. And I wanted to first ask you, you testified that that these lines in questions provide the potential opportunity for solar development along those lines. Did I understand you to testify to that, sir?
Close. I testified that these lines, once put in service, allowed for the growth and interconnection of solar facilities on other lines that were offloaded by these lines being put in service.
All right, sir. And do I understand correctly that when a solar developer attempts to connect a solar development to your system, that the solar developer has to pay for all transmission line upgrades?
Yes. Yeah. If it is pursuant to the state interconnection procedures, I believe yes, that is correct.
Yes, sir. And in fact, the law prohibits the solar developer or Dominion in this case from charging its other customers for the cost of those transmission upgrades, does it not?
I believe it does.
Yes, sir. Now, you testified that among the reasons for the need for these lines, now that the nuclear plants have been abandoned, is because DESC has replaced generation it was expecting from the nuclear project with generation resources obtained by repowering McMeekin Station and purchasing the Columbia Energy Center. Do you recall testifying to that?
I do.
All right, sir. And you will know, since you're the manager of your department, that the McMeekin Station was actually built as a 294 megawatt coal-fired power station, correct?
Well, that 209 it was coal, yes. The 294 megawatt might be a gross number. I'm not familiar with that number, but the net facility is 250 megawatts. But yeah, assuming that is, I'm not sure about the 294, but that's in the general size of that facility. So yes.
Very fine. And you know, the number is not so much important as the answer to the next question. And you'll recall, and because you know this as a part of your duties and functions at the company, that the McMeekin coal station was initially built and put in service in 1958, correct?
I'm not sure of the exact year, but that subject to check. That sounds right.
All right, very fine. And when the McMeekin station was put into service, your predecessor back in 1958 or 57 or 56 would have had to have designed a safe and reliable transmission interconnection from the McMeekin station onto SCE&G's then existing transmission system, correct?
Yes, certainly the case. I'm not sure what, I mean, that in general would be true. I know the requirements to interconnect facilities and comply with NERC standards and all the evaluation you have to do these days is a lot more stringent and actually law rather than back in the 50s and 60s when a lot of these things were just sort of good practices, but not necessarily mandated by law. But
I
yeah.
understand. But my point is that it is true that SCE&G officials at the time would have ensured that the SCE&G transmission system had sufficient capacity to take on 250 megawatts or 294 megawatts of additional coal-generated electricity, correct?
Yes, back in 1950, whatever year you said, yes, I assume they would have done that.
And isn't it true that the McMeekin station was converted from the two coal units were converted to natural gas in 2016?
That sounds right. Somewhere in that vicinity, that sounds right.
Very fine. But before the nuclear plants were abandoned, correct?
Yes, correct. Before they were abandoned.
Thank you. Now, and it would be true, would it not, that SCE&G would have ensured that its transmission system had adequate capacity to accept the 250 megawatts of the natural gas generated electricity in 2016, correct?
Yes, at that time. At the time when they converted to gas, then yes, being that it had run as coal, it would we would have deemed looked at the current, the near term operation of the plant on natural gas and made sure that the system could reliably operate on gas as well.
Now, I think you testified that there was a concern that justified requiring the ratepayers to pay for these lines today, that the Williams station in Charleston generated electricity, and that additional electricity generated from Columbia needed to be transmitted to Charleston. Is that a fair summary of your testimony?
Well, yes, it's my testimony that that's required. It's also within Mr. Young's testimony as the primary driver for the need for the St. George lines due to the imbalance even then, which is worse now, but the expected imbalance of the growing load in Charleston versus the generation available in the Low Country. So yes, it was in Clay's testimony as the primary driver for those lines, and was in mine as well.
Tell me when Clay is Mr. Young's nickname. Tell me when Mr. Young would have testified that the primary driver for these lines was making sure that notwithstanding the construction of the nuclear units, that electricity got to Charleston.
I believe it was in his 2008 testimony, and included in the system impact studies that he included for units 2, VC Summer units 2 and 3 in the system impact studies. But I believe it was specified in his testimony in 2008. If not, it was, or if it was, it might have also been in his testimony in the certificate, the siting hearings for those lines a few years later. I think that might have been 2011 or 2012.
would it surprise you, Mr. Parker, to learn that the Public Service Commission characterized Mr. Young's testimony in order number 2011-978 as follows? At the hearing in this matter, SC&G's witness, Mr. Hubert C. Clay Young, testified that the generation interconnection studies he and his staff prepared had identified a total of 4 new transmission lines that will be needed to route the electric power generated by the units onto SCE&G's transmission system. Would it surprise you to learn that that's how the Public Service Commission characterized Mr. Young's testimony in the 2011-325E docket?
Can you repeat that again? I'm sorry, just so I can. It sounds like that would be accurate, but I want to hear it again if you don't mind.
I am happy to repeat it. No, please, no apologies necessary. And I'll go a little more slowly. At the hearing in this matter, SCE&G's witness, Mr. Hubert C. Clay Young, testified that the generation interconnection studies he and his staff prepared had identified a total of 4 new transmission lines that will be needed to route the electric power generated by the units onto SCE&G's transmission system. Does it surprise you that that's how the Commission characterized Mr. Young's testimony in docket number 2011-325-E?
Which can you? I need to refresh my memory on the 2011 order you're referencing. The 4 lines being was that for unit? Was that the docket for unit? The transmission lines for unit 3?
No. Let me read what they are, and then I'll see if I can't quickly find the Commission's characterization of Mr. Young's testimony in the 2012 docket, if you prefer. Number 1 was the VCS1 Killian 230 kV line, the Killian line.
Right.
I'll give you the abbreviations. Number 2 was the Lake Murray line. Now, number 3 was the VCS2 St. George lines numbers 1 and 2, parentheses, the St. George lines, will route and it goes on to describe it, will route the power from the units to Charleston area load centers and other load centers in the South Carolina Low Country. That the St. George lines will run from the VC Summer Station site to a new 230/115 kV substation to be built near St. George, South Carolina. Those were the 3 lines that the order identifies. Do you recognize those lines, Mr. Parker?
Yeah, I do.
Very fine. Is that the testimony you were recalling, or would there be a benefit to my finding his testimony characterization in the 2012 order?
No, I mean I recognize those lines, and I know those were 4 lines as part of these N&D projects that were specified as needed by Clay or Mr. Young, and that were ultimately approved for for a certificate of necessity. So I guess I'm satisfied that was the case. I guess I'd like to know maybe if there's a question that before I may need more information, if you can ask me what the where we're going, I guess.
Well, no, I think you've answered my questions on that along those lines. I think. Well, if not, well, I'll come back and we'll revisit it. One of the you testified that in addition to the McMeekin station, that the purchase of the Columbia Energy Center justified the ratepayers paying for these lines at this time. Do you recall that?
That was part of our that is part of my testimony, that as an indication of the use and usefulness of these facilities, new facilities. Yes.
Very fine. Thank you. Now, the Columbia Energy Center was purchased by the company in 2019. Is that correct?
forget the exact timing. Maybe it was finalized in 2019. I know we announced that was the plan as part of the and going into the merger agreement with Dominion, and that might have been when it was finalized. But yes, so
I'll accept either 2019. That would be fine. But my question to you is, Mr. Parker, that isn't it true that the Columbia Energy Center was established in 2004?
That sounds right. Yep.
And while I may sort of misuse the terms of art here, it was built and established in 2004 as a merchant plant. Would that be a fair general statement?
Yes.
And SCE&G in 2004, and it was interconnected to SCE&G's lines in 2004. Isn't that true?
I believe so. It definitely was. I think it was 2004, right in there.
All right, and I don't mean to. I'm not trying to be mysterious. I'm just looking at Dominion's website, so I take it as being accurate. But for our purposes, the 2004 range will suffice. Would you agree?
Yes.
And it's a 540 megawatt facility, is it not?
Yep.
And so SCE&G's transmission lines had the capacity to handle, accept, and transmit the 540 megawatts of electricity generated by Columbia Energy Center well before the nuclear plants were abandoned, correct?
Well, that's the question there is there's multiple kinds of interconnection. When you for a merchant plant like that, they can interconnect with the intention of selling the output of their plant off system, not for what was then SCE&G. And to my recollection, as my time in the system operations for years during that time, that was the case for Columbia Energy Center. I do not think they were used to Dominion or what was then South Carolina Electric and Gas to take their output for I can't say never, but almost never. Anytime they did run, it was always to sell to an external utility.
Excellent, but your lines, SCE&G's lines, transmission lines, had the capacity to move 540 megawatts of electricity from the Columbia Energy Center as long ago as 2004. Isn't that true?
Well, again, that was with the idea that the power would be transmitted off system to someone else. That's the case. To study the delivery of the output of that plant to the low country or somewhere else is another matter.
All right, sir. And another reason you give in your testimony to justify the ratepayers paying for these nuclear baseload review act nuclear costs was the need to transmit the 1,296 megawatts of capacity from DC Summer 1 up and down the north-south corridor, correct?
I'm not. Maybe I need to be shown that the 1,200. Maybe that's the combination. The figure you're referring to is the combination of our share of the DC Summer plant and the total capacity of the Fairfield pump storage facility at that same substation. That may be what you're referring to. If that's the case, then yes, I think that was my assertion.
Yes, sir. I mean, I appreciate the explanation. I refer you to page 9 of your testimony, and in particular, page 9, lines 9 through 11, and it simply reads, these upgrades reinforce the ability to deliver power into these growing load centers from the south and reinforces the connection between this area in the Jenkinsville site where 1,296 megawatts of capacity are located today. Have I read that correctly?
Yeah, that's right. I think, yes, and I wasn't clear there. I think the 1296 comes from the 2/3 share of the output of the nuclear plant plus the roughly 600 megawatts of Fairfield pump storage generation that is also at that same site. So yes, you have, that's correct.
All right, and isn't it true, Mr. Parker, that both VC1 and the Fairfield station you described were constructed as long ago as the 1980s?
Yes, that's before my time, but that's I'm not sure exactly when Fairfield came to be, but certainly well back in that time frame, or if not earlier.
Yes, sir. And isn't it true that these two facilities would have been generating approximately 1,300 megawatts of capacity long before the DC summer stations 2 and 3 were on the drawing boards, correct?
Yeah.
And isn't it true that that SCE&G had sufficient capacity on its transmission lines to transmit approximately 1,300 megawatts of capacity from these generators up and down the north-south corridor?
Yeah, back in the 1980s, I would say that's true. I mean, I guess this is my first time testifying, so I don't want to be out of order here. But I guess I can continue to answer your questions. But if the point is, it's 2020, it's 2021 now. The system has greatly changed quite a bit. There's so the fact that there was sufficient capacity to interconnect these facilities in 1980s, or even for Columbia Energy in the early 2000s, does not mean that this, in fact, not only does not mean, it in no way indicates that you have, that therefore you don't need new transmission in the year 2021 or beyond.
But the fact remains, does it not, Mr. Parker, that that this Public Service Commission found in 2011 and 2012 that the basis of the need for the disputed transmission assets was that they were necessary to route power generated by units 2 and 3 from the VC Summer plant up and down the north-south corridor. Isn't that true, sir?
Well, the basis stated in those orders and in Clay's testimony was primarily the interconnection of the VCS 2-3 unit. But I do want to say right here, as Mr. Kassan said yesterday, very accurately so, the transmission planning process is a very complex process, very detailed, and certainly for a project of this size and this magnitude, you do not, when you interconnect facilities like that, you do not just willy-nilly say, well, okay, we need 4 transmission lines and we'll just, route them to the nearest substations that we can, as shortest distance away, to get the power from that plant onto the grid. You assess, as part of that, because it's a long-term process, you assess where the greatest needs are for new transmission and where the growth is and where the old infrastructure is that will probably need to be replaced anyway. So all that to say that that's a standard part of transmission planning process. It may not have been explicit about all those things in Clay's testimony, although he was very explicit about the primary driver for the particularly the latter phase for Unit 3 of the imbalance and the continued expansion of generation in the Columbia area and the mismatch of generation versus load in the Low Country area needed to be addressed. And so all those things were factored in. It simply was not, like I said, the VCS 2-3 interconnection was certainly the genesis, what triggered those studies, but it was far from the only consideration of why these facilities were needed.
Thank you, Mr. Parker. Mr. Chairman, I have no further questions, but I would at this time ask the Commission to take judicial notice of orders number 2011-978 and order number 2012-730. I examined this witness from both.
Notice taken. Thank you.
Thank you very much.
Department of Consumer Affairs.
No questions, Mr. Chairman. Thank you.
ORS.
No questions, Mr. Chairman. Thank you.
Commissioner questions.
Mr. Chairman.
Go ahead.
Commissioner Thomas.
Commissioner Thomas. Thank you. Mr. Parker, I appreciate your overview of the interconnection on the system. That painted a pretty good picture for me of aspects I've never really thought about before. In any event, so you used the term used and useful several times, and I'm familiar with that concept. And you also talked about percentage of utilization. Not very familiar with that, but nonetheless. I have a question for you that really relates to cost and expense. So would the upgrades be less expensive if they were constructed to what is actually needed today instead of what was constructed specifically to support the 2 nuclear plants that are not in use? In other words, would something less expensive have been constructed to meet today's needs rather than the repurposing of those lines?
Well, yes, good question. I'll again say that, as I said, when you factor and when you plan a transmission system, you look far into the future. Certainly building transmission lines is an expensive proposition. So when you go about planning to build new transmission infrastructure, you take into account a lot of factors, a lot of needs, and a lot of it has to do with the 2 big pieces of the equation are where is the generation being added, and where is the load that generation is needed for growing, and where will it be in 5, 10, 15 years? And the other part of your question is a good. You touched on another good point, which is you've probably heard of the term the transmission grid. It's a grid because all the lines. It's like a maze of transmission lines that power is flowing through and around and all through different levels and in different directions in some cases depending on the configuration of the system. So once you integrate new lines into the system, all that to say, it becomes like one machine. It is now part of a grid, and so it's very difficult to say, this particular line was only needed for this particular plant. All the power from this plant flows on that line, and no other flows are on that line. So you can't just say, because the DC Summer Units 2 and 3 were, abandoned, that therefore, the only power flowing on these new lines was from those facilities. Therefore, they're not needed. You just can't do that. I know that I live and breathe this stuff every day, so that's something that's obvious to me, and I understand it wouldn't be obvious to other people that don't do this every day. So I understand the question, but it's just not something you can do. I think what we tried to do, and I referenced it in my testimony, was when the transmission aspect of the abandonment of these projects came up in the 2018 merger docket. Our previous witness, Joseph Richards, did an extensive analysis of the best way to do it is, let me step back and say, whenever you make any changes to the transmission system, this is standard not just for us, but for Duke or any Southern or any other utility, whether it's adding load, adding generation, adding a solar plant, you have to run studies. You model the plan change, and you run extensive studies on what it would take to add that load or add that generation, run all your contingencies and simulations of, well, what if this happens, what if this line trips, and all that's required, and then you determine whether the system as is can support that, and if it can't, you determine what needs to be added or changed to support that, and all that to say that Wade Richards in the 2018 docket, and I referenced it in my testimony for this hearing, did an extensive analysis of, even with the abandonment of the VCS 2-3 units, and they're no longer in place, he took all the NND projects that we're talking about and took them out of the system and went back to the way it was without these projects, and ran all those simulations with the new state of the system, with the way generation runs now, with the inversion of gas-powered units running more and coal running less, and with the continued growth of and the retirements of coal plants in the Low Country since that time. He ran all those simulations and provided a list of all the NERC violations we would have on throughout our transmission system without these projects in place. That is the accepted and really only way to determine. I should say it shouldn't be the only way, but it is the best and accepted way to determine if these facilities that we're talking about are used and useful. And what his studies found were that without these projects, there would be multiple facilities, transmission lines, and transformers that would be overloaded or heavily loaded and need to be replaced. And if not for these facilities, due to the sheer number and magnitude of the issues that would be present, if not this, what we have done, something on the scale very comparable to what we have done would be needed to solve all those issues. So I'll stop there. I know that that's probably more than you wanted, but that's just the only way to explain how this kind of evaluation and how this analysis is done. And so I'll stop there and hope that maybe that answered your question, but certainly if it didn't, I'll try again.
Well, thank you. I appreciate that input. I guess basically what I'm wondering or thinking is that if you start planning with a blank sheet of paper and you can just do whatever's the best, and then you can probably save money over if you've got something that you've got to work with. And I'm just wondering if, go back in time, pick a date, I don't know, theoretical, go back to, say, 2012, and those nuclear plants weren't in anybody's mind, and you started the planning process then, and with a blank sheet of paper. It just seems to me that potential to have configured a better system at less cost that does what needs to be done today. I mean, is that possible, do you think?
Well, if you were to go back in time at some various point in time, it's hard to say exactly what those results would show, but I just want to stress that when these nuclear plants were planned and the associated transmission projects to go with it, as I said, the fracking revolution had not yet occurred, and not just Dominion's or SC&G at that time, and all the other utilities were at that time. All their plans and all their systems had been designed based on all these coal plants that were running scattered throughout the areas and the transmission to support that. Once the fracking revolution took hold and natural gas prices plummeted, all these utilities very quickly started adding combined cycle plants, converting coal plants to gas plants, particularly when you add combined cycle and then start retiring coal plants. Well, now the systems are totally being run totally different from how they were planned for many years. And I guess just speaking from transmission planners, to us, it's not at all surprising that when that kind of major inversion of from how the systems were planned for many years to something totally different, that you're going to need to drastically change your transmission infrastructure to allow for that. And the same thing applies for this, as we rapidly increase solar facilities on our system, and they are displacing coal. There's transmission. The thing about solar is it is for the advantages it has. One big disadvantage is that by its very nature, solar plants are located where the load isn't. They will be located out in the country, way away from where all the center of the load is. So you're going to need transmission to get the power there. So all that to say, I can't say that in 2012 that there would be something starting from scratch that would be significantly different from what we have today. It might be not exactly the same to the same substations, but again, as I said earlier, it would be on the scale of what we have done. I mean, I just the final thing I'll say is when we determined the need, or it wasn't me, it was Clay Young and the people that worked back then, foresaw the need to get more power to the Low Country. Even back in 2007, I think that was just really prophetic, because it was we could not have known then that the size of the retirements of the coal plants that has taken place, and again, not just what's planned or what's announced, but what has already occurred. So, these would be needed in some fashion, and in this magnitude. I can't say the exact dollar figure, but it would be in the same ballpark, in my opinion.
Okay, thank you. Appreciate your help. That's all I have.
Chairman Williams.
Commissioner Caston.
Good afternoon, Mr. Parker.
Good afternoon.
I had to take an electrical engineering course or two. The only positive thing I can say about it is I did pass the course, and I did not choose the option to take more of those courses.
Well, if you took them at Clemson, you're probably like I did. You're probably in good shape. So.
Well, I did. Thank God they let me out. What is the typical life of a 230 kV line?
That's a good question. That's several parts that go into that, and I'm not the expert. Our transmission line design folks and power delivery folks are more experts on this. But from my understanding, there's a couple of things that factor into that, and it's not just 230 kV. It's
right.
This applies for 115 kV and other voltages, but it has to do with, obviously and I don't want to get too technical here, and if I do, please stop me. But when you look at the life of a transmission line, it has to do with not just the lines themselves, the conductors, but also the structures that support those lines, the poles that are used to carry those, every so much distance to string the line along. So anyway, all that to say that, and also in the non-coastal regions, my understanding is the life of lines can be somewhat longer than in the low country, where the environment is such that they don't last as long. But all that to say that, and again, this would be a generalization, but some lines and structures you could have in the range of 30 or 40 year lifetimes, useful life, something in that range. But again, that's I'm certainly not the ultimate expert on that, and that's sort of a rough guess, but not a guess, but sort of an estimate. But that it's in that ballpark.
Thank you. I understand, because in your, I guess when you were talking about reinforcing lines in your testimony, the new lines are bundled, double conductor lines. Their capability as measured in impedance and amperage is approximately double that of single conductor lines. And again, and first of all, I apologize for always bringing up my former things I did, but we're all creatures of our past. And I guess with at least distribution from the water, I would think it's maybe similar in that, hey, you got better flow, you can flow more stuff through it. But one thing I was wondering about when it comes to replacing the lines, for example, we chose to have a master plan and update it about every 5 years because we're in a pretty high growth area, which I would think you guys are too. And we'd look 20 years down the road. Okay, here's our existing distribution system, transmission lines, distribution lines. And here are the existing loads that are on those lines. What will those loads be in 5 years? What will they be in 10 years, 15 years, 20 years? And from that model, we would develop a running plan, a running capital improvements plan. These are the immediate things we need to do, because of growth in this area or this line, the flow's just not good, it's old, or whatever,
Right.
whatever reason. And then, the 5 year to 10 year, 10 year to 15 to 20, such as that. And again, no plans cast in stone. I mean, things happen. But generally speaking, it allowed us to prepare, looking at our capital plans for the next 20 years and doing those in 5 year increments, however you think it's wise to. That old adage, fail to plan to fail. It has a lot of merit. Does Dominion have similar plans? Do you guys do something similar?
We do. I mean, certainly we plan out 5, 10 years for looking at the projected needs of the growth areas where infrastructure is growing, where and then where we plan to meet that need with transmission and generation. And we also look at useful life of projects, useful life of facilities that are in place, and replace those. I know, and that's a part of it. I know that there is a end of life slash hardening effort that may be more formal in other utilities. That's something we're looking at, that as a more formal plan, just evaluating end of life facilities and looking at replacing them. That's not to say we don't already do that, but we're looking at, in consultation with how Virginia does things, and maybe some other utilities do things where they go out and have a program that replaces facilities at their end of life on a routine or cyclic basis. We're evaluating doing more of that than we currently do, I guess, is the way to answer that. But yes, it's always been a part of our planning and replacement planning and how we budget our capital budget for 5 and 10 years out, if that answers your question.
Somewhat. But again, in my formal role, one thing I took very, very seriously, and this is me, is I felt like our existing customers and those in the future that hadn't arrived yet were depending on me to either do and our folks to do a good job of preparing and doing things, because it's our job, not theirs, and they don't know. I mean, we have a product, and typically the only 2 times folks thought about us was when the bill came out and when they turned the tap on, if nothing came out. Neither one of those, is the thing that's warm and fuzzy. But we took our role seriously. I took my role seriously. So I say all that for this reason, is no utility, none, wakes up one morning and discovers that all of a sudden my system's gone to heck in a handbasket. What happened? How did it age like this? How did this occur? It occurred over time, just like growth. I mean, that's what the planning was. That's why we were looking 20 years out. Only God knows what's going to happen 20 years from now, but using reasonable methods, tried and true, we can have a general idea of what those things are going to be as we model our systems. Because I notice in your figure B on page 12 of 30, alternative routes of VCS1, Killian 230 kV, alternate A, alternate B, and I'm assuming you liked alternate B or chose that even though it's longer and would be more costly because, hey, that corridor over along I-77, Winsboro and all, that's going to be a high-growth area. I'm encouraging you and Dominion and others, don't just wait on these moments. If hopefully we're all planning well, looking into the future. That is what our customers are expecting of us. It's not their job to do our job or yours. It's our job to do our jobs. And they're counting on us, looking into the future, preparing well in advance, and running it well. And I'm not saying you're not doing that, but again, I think plans matter. And I trust that Dominion's doing that. That's pretty much all I had. Did you?
Well, if you don't mind, if I could, yeah, I agree with you wholeheartedly, and I think the record for ST&G and now Dominion Energy South Carolina, as Mr. Kassam said, you know, we take reliability and planning and of our system very seriously, and I think our record as far as outages, as Mr. Kassam pointed out, and Sadie and some of those numbers about restorations and outages, we couldn't do that if we hadn't planned our system well. You know, done all the you know, if we had a lot of old facilities out there that were not reliable, we wouldn't have those kind of metrics, and we wouldn't have those kind of numbers. So I understand what you're saying. I guess I'm not sure in light of these projects for the NND projects. You know, these were planned, and this has been 13, 14 years in the making. So this is not it wasn't something, even though it's now up for being put in the rates, this is something that's been developed over the years. But many other things have also been put in place. These are certainly not all the projects we've done. We've done some of the pictures Mr. Kassam showed where we've down on the coast where we've replaced and put new steel poles, you know, replaced old wood frames. We've done all those things. So I certainly agree with everything you said, and I just want to make sure you understand that Dominion in South Carolina understands that and is in complete agreement with that. I guess I'm concerned or that from the expression of your thoughts there that I know you just said that you're not saying we don't do that, but I just want to make sure you know we have done that. We do that every year with the budget we have for going out and replacing poles we feel are that are wood that need to be replaced, with the maintenance we do, with the you know, all those things. So I wholeheartedly agree with you, and I think Dominion, South Carolina, does everything in our power to uphold those standards that you talk about. You know, and you know, we're always striving to improve. But I feel like, based on what Mr. Kassam said and some of the reliability numbers we have and how few outages we've had for various storms, that bears that out.
I understand, and again, I'm not saying you don't. One thing I can say, you know, we had a plant that was built in the 20s. No magic there. We knew that built in the 20s, you know, there's limitations, but there were things done through the course of time to, you know, ameliorate things that needed it. But that was part of the plan too. Okay, how do you phase this out? When do we phase this out? When do we do these things? The only point I guess I poorly made is that at any time you could come into our utility and we could pull out the plan and show you for the next 20 years what we have planned with reasonable detail, and not only the anticipated capital cost, everything else. And you may or may not have all the things you're saying. I mean, I'm not questioning it. It would be very helpful, very useful for the utilities. All right, if you don't have one, you need at least a 20-year capital plan and master plan, I think, in my opinion. And if you don't, you should do one, and then I think it ought to be available within reason.
Well, I can assure you we have a very detailed capital plan for the next 5 and 10 years. I would think that we could certainly provide the information that you're looking for to back that up. But I don't know that it's 20 years, but certainly 5 and 10 years for like I said, end of life, for future transmission projects that my group has indicated are going to be needed in that time frame, so that we can, you know, get the necessary regulatory approvals if it's 230 kV lines, get the materials ordered, the designs. So we do all that and do it to great detail. It's not in my area, but it's in other areas that report to Mr. Kassan. We certainly believe in that and do that, and I think we can certainly provide you other information that can put your mind at ease that we are doing that kind of planning to the level it needs to be. So anyway, I offer that just to try to answer your question as best I can.
I appreciate it, and I need to close with the Go Tigers.
Go Tigers.
Thank you.
We'll be back next year.
Commissioner questions? Redirect?
Mr. Chairman, I do have some redirect. I'm happy to go forward with it. It may take a few minutes, or we could do it after lunch, whatever the chair's preference would be.
Few minutes. How long you think, Mr. Attorney Ziegler?
It could be 15 or 20 minutes.
All right. My court reporters are depending on you, Mr. Ziegler.
So does that mean proceed or not proceed?
Proceed.
All right, very good. Let me begin, Mr. Parker, if I could, with a fairly simple question. The purpose of your transmission planning is to be sure that you can reliably connect generation with a load so that you can serve customers. Is that correct?
Yes.
And the purpose of generation is to be able to serve the load that customers put on the system. Is that correct?
Yes.
So in both cases, it's the load that customers put on the system that's driving both generation and transmission. Is that correct?
Well, yes. The load that's being added, you need to know what those plans are, so you have the adequate resources to meet that, and then if you need to know where those resources are, so you have plans for the adequate transmission to get that power from the generation to the load. Yes.
And both in 2006, when these lines were planned, and today, the two main load centers on the DESC system are the Charleston area, Low Country, and the area in and around Columbia, South Carolina. Is that correct?
That's correct.
All right, sir. Now, Mr. Elliott spent some time with you talking about the orders related to the siting of the lines we're talking about here, particularly Order 2011, I think it's 325E. Do you recall him getting you to read some language from that order?
Well, he read it to me and asked if I thought it was accurate or that was my understanding. And yes, but that's I remember that.
And part of it was his that part of the order which referred to the generation interconnection studies that he being Mr. Young, and his staff had prepared and presented, I think both in 2011 325E and in the prior 2008 docket as well as the 2012 dockets. Is that correct?
Yes.
I'm going to ask you to have a look at that study with me, if you would. And I believe it's being shared with the other parties so that they can follow along. And let's see if I can bring it up effectively on my machine so that you can see it with me. So, Mr. Chairman, I'm sure you will let me know if my sharing isn't working, but let me see if this is going to do it. Can you see that page?
Yes, just blow it up a little bit.
Let me see how we can do that. Here we are. We'll go to 150. Is that better, or shall we try it even larger?
That looks good. Could you identify the document?
The document is, I'll go to the front page of it. It is an attachment to the direct testimony of Hubert C. Young in docket 2011-325E. and it is the Exhibit 2, which is the Generator Interconnection Feasibility Study for VC Summer Nuclear Units 2 and 3, dated December 18, 2006. Can you identify this, Mr. Parker, as the feasibility study for the units that was the basis of the siting of the lines we're discussing?
Yes. Looks like my understanding and what I've reviewed, that looks correct.
So let's look at page 28 of that document. If I can find it, this is an excerpt from it because the document itself is much longer. And let's go to the second, the first full paragraph. Could you read the line that begins where my cursor is at the end of that paragraph, discussing the modeling of lines during that planning study?
I'm sorry, you want me to read that, what you highlighted, or just that whole first paragraph?
Well, why don't you read those? I mean, you can read the entire first paragraph. I don't want to be too hasty with this. So go ahead and read the whole first paragraph.
All right. We also have two major 230 kV tie lines that are highly loaded. The 230 kV lines are the Watery Sumter Progress 230 line, with a transmission tie line with Progress Energy, and the VC Summer number 1 Blythewood with Santee Cooper 230 kV line, which is a transmission tie with Santee Cooper. The high loading on these two lines shows that the generation is trying to leave the Columbia area, or, in other words, the generation in the Columbia area needs another path to a major load center.
All right, sir. And let's go down to the paragraph that begins in Transmission Planning's 2016 model. And if you would read on through the next 2-3 paragraphs.
Okay. I guess tell me when to stop. In Transmission Planning's 2016 system model, the Charleston area has a projected load of 1,960 megawatts. However, there is only 857 megawatts of SCNG generation located in the Charleston area. All of this information shows that there will be significant generation excess in the Columbia area, while there is significant generation deficit in the Charleston area, as indicated in the table below. Do you want me to read these numbers?
Well, let me ask you a question. Is that last statement still the case?
It's the case. If it is the case, certainly, if not even the imbalance is even greater, even in the year 2021, than we expected, and I will say, even though the Kennedy's coal plant that was not included in the Charleston area, being in Walterboro, it is even a bigger issue today than it was expected back when this study was put together. So, yes, this is the situation, but even worse from a deficit standpoint.
Looking at your current models, what would the Charleston area load be? I guess your current models would be going out 10 years from today. Would they be higher than the numbers that are here?
Yeah, I think what we've seen currently, I had those numbers somewhere. Currently in the year 2021, the Columbia area load is about that number, but of course what we've seen is that Charleston has grown even faster. The Charleston load has grown even faster than what we anticipated. So it's whereas this showed that the Columbia area was a couple hundred megawatts more than the Charleston area, it is now about equal, both about 2,100, and I believe maybe in the next 10 years our forecasts, I don't have it right in front of me, but I believe it looks more like 2,500 megawatts in the next 10 years.
Could you read the paragraph that follows there? The generation deficit. let me get it lined up. Sorry, there we go.
Okay. The generation deficit in the generation deficit in the Charleston area is of concern to transmission planning, especially when contingencies are considered. A large portion of the generation in the Charleston area is the A.M. Williams unit, which they have 615 megawatts net. When this unit is outage, the remaining SC&G generation in the Charleston area is 242 megawatts, creating a generation deficit of 1,718 megawatts in the Charleston area. To address this concern, the following analysis will evaluate the effectiveness of new 230 kV lines from V.C. Summer toward the Charleston load center.
Now, Mr. Parker, are the concerns listed in this 2006 report on which the current lines were based, are those concerns still motivating concerns for transmission planning on the DESC system?
Certainly, as I think I tried to indicate to Mr. Elliott, it's still a concern. It's an even greater concern because when this report was put together, I'm not sure. Well, I believe Kennedy's coal plant in just Walterbur, just above Charleston, was still in the plans and had not been designated or thought about for retirement at this point in time. So, and then of course, as I pointed out in my summary of my testimony, since these studies were done, Santee Cooper has also retired a number of coal plants in that same area. So, there's very much a concern of our planning department now, even more than it was 15 years ago.
Chairman Williams, could I get a clarification?
Absolutely.
Mr. Ziegler, I wasn't sure I heard that correctly when you talked about the planning. Was that 2006, did you say, or 2016?
2006. That was at the beginning of the planning process for these lines. Okay,
thank you.
Well, if you don't mind, Commissioner Caston, I think where the confusion is, this study, what we're reading here, was performed in 2006, but if you see it just up above, this was the 2006 projection of imbalances that would be in existence in the year 2016.
Okay, so this was a study that projected 10 years into the future, and these were the concerns for that future demand?
Correct.
Okay, so was this part of like your master plan or whatever?
Yes, back in 2006 when all these facilities that we're talking about were planned and studied, yes, this document is what describes our projections out 10 years and what our concerns are and how we're going to address them.
So you had the concerns in 2006 based on that projection, correct?
Certainly, yes, that's correct.
It's 2021.
Right.
Was anything I'm sorry, I may be speaking out of turn, Mr. Ziegler, I apologize. I wanted that clarification, and I'm going on asking questions. I apologize.
Mr. Caston, absolutely. The point of the hearing is for the commission to understand, and whatever questions need to be asked, obviously we want them to be asked.
Well, I guess that is a question I have then. You know, this planning document shows 2006 is when they were looking 2016 that we're going to have an issue, and it's 2021, and I don't know. I'm just curious. I mean, why were plans not put in action around 2006? I just asking that question. I don't really know.
Let me see if I can be of some help there. Mr. Parker, based on these 2006 studies, the plan was made to increase the capacity of the transmission system by building the facilities that are at issue here today. Is that not correct?
Yes, that is the crux of what we're discussing here is Commissioner Caston, that these new facilities were what were planned to solve this problem.
And do these facilities, in fact, solve this problem?
Yes.
Now, Mr. Caston asked a question about blank sheet of paper. Isn't it the case that the studies that were done here were a comprehensive view of the transmission system to resolve issues related to this imbalance in load?
Yes.
All right, sir.
Clarification again, Mr. Ziegler, if it's okay. I think that was Mr. Thomas that talked about a blank piece of paper, although oftentimes I probably am a blank piece of paper, but no, I kind of like to plan. Thank you.
Very good, sir. I apologize for misattributing that question. Mr. Chairman, at this point, I would like to move into evidence the excerpts from Mr. Young's testimony and the exhibit, which was the 2006 planning study that were provided to the parties and the basis of this cross-examination.
Mr. Chairman, this is Scott Elliott. I probably don't have an objection, but I would like clarification. Mr. Ziegler indicated he wanted to introduce excerpts. Did he not want to introduce the whole testimony with exhibit?
I'm delighted to introduce the entire set of documents. I'm not sure that we have them at our fingertips electronically, but we will get them to the court reporter as quickly as we can.
Mr. Chairman, I'm not asking that. I'm just asking what Mr. Ziegler is asking to introduce.
Well, I was asking to introduce the excerpts, but I'm happy to put in the full document.
All right. So, as I understand, I would have no objection to the testimony of Mr. Young in the 2011 proceeding coming in with exhibits, if that satisfies the commission.
Attorney Ziegler, could you identify the document again?
The document is listed as our cross-examination or redirect exhibit A16, is that correct? A6, excuse me, A6.
All right, Dominion Energy South Carolina Exhibit A6 will be marked and entered into the record as hearing Exhibit 24.
Thank you, Mr. Chairman.
Thank you, Mr. Chairman.
Mr. Parker, let me ask you a couple.
Attorney Ziegler.
Yes, sir.
Hold on for me for a second. Attorney Elliott, do you object to the excerpts being included into the record?
No objection, sir.
All right, proceed.
Thank you. Mr. Parker, you're familiar with the different, in general terms, with the different types of transmission service that are available to generators, third-party generators on SC&G or DESC system, correct?
Yes.
And there are both firm and interruptible generation arrangements that are possible, correct?
A firm and non-firm, but yeah, or interruptible, correct?
Non-firm. And are you aware of the type of generation of transmission service that Columbia Energy Center obtained from DESC before it became acquired by DESC?
I am not sure. I know that they had service. I don't know the answer to that question specifically. I know that they had the necessary service to sell their output, I guess on a non-firm basis, off system to other utilities. I do not know if they had firm service as a what we call as a network resource service. I don't think that they did, given that that they weren't ever used to serve SCE and G generation, or if they were, very, very rarely. But I just can't say. I'd have to have someone find that out for me. I don't know.
All right, sir. But if they were anything other than a firm network resource for SC&G, they wouldn't be included as part of your studies of how to deliver load to the Charleston area, would they?
Oh, that's correct. Yeah, that's correct. They were not included as part of that analysis. And are you familiar with the analyses of the system that were done related to the retirement of McMeekin Station as they were presented in the IRPs filed with this commission? No, I mean I'm not familiar with exactly what the length of studies that were done to evaluate the retirement of McMeekin. I know that it was being evaluated, and a decision had been made that at some point, I forget the year, subsequent to the new nuclear units being going into service, that they would be retired. But I'm not familiar with any of the transmission planning or studies done by the generation group in the determining that was the best plan forward. I just know that decision had been reached subsequent to getting the new nuclear plants online.
All right, sir. Let me ask you to have a look at the following document, which is the 2012 Integrated Resource Plan of SCE&G, filed with this commission at that time. And you would agree with me that this was a plan that was entered into, or that was in effect after the decision was made to build these lines, correct?
Yeah.
And let me take you to page 29. And ask you to read, if you would, the first paragraph of page 29.
Okay, I think. Can I ask you just to blow it up one click, please?
Oh, certainly. Let's see. Let me get rid of that and reposition a little bit. Maybe I will need to slow down a little bit. Is that legible for you?
Yeah, that's good. That's good enough. Let me go ahead. Retiring all 6 units in 2017 has the smallest levelized incremental revenue requirement over the 25-year study horizon. This is listed as scenario 7 in the table above. A close second alternative listed above the scenario 9 is to operate Urquhart Unit 3 and both McMeekin Units 1 and 2 using natural gas, and retiring Candy's Units 1, 2, and 3. Based on these results and the existing environmental regulations, the company's reference resource plan calls for the retirement of the 3 Candy's units with the commercial operation of VC Summer Unit Number 2 and the retirement of the 3 remaining coal-fired units with the commercial operation of VC Summer Unit Number 3 in 2018. Although today's reference resource plan calls for the retirement of the 6 coal-fired units, the company will continue to monitor, among other things, developments in environmental regulation, and will continue to analyze its options and modify the plan as needed to benefit its customers.
So the retired plan, the 3 remaining units to be retired when VC Summer 3 came online in 2018 included the McMeekin's Units 1 and 2. Is that correct?
Could you restate that again one more time? I'm sorry.
I just wanted to knit this together. The McMeekin's Unit 1 and 2 are part of those 3 units which were to be retired in 2018, the Summer Unit Number 3 coming online. Is that correct?
Correct.
Thank you, sir. Bear with me 1 second, Mr. Chairman. I believe those are all my redirect questions, Mr. Chairman. Oh, I would move into the record, by the way, the 2012 IRP. I think the commission can take judicial notice of it. It's a document in their records, but I would move it into evidence nonetheless.
Notice taken of the 2012 Dominion IRP.
Would ask the commission.
You wanted it admitted, do you? Okay.
Either way, admission is fine, and we would ask that the witness be excused at this point.
May I ask another question? Is it too late?
No, go ahead.
I'm sorry to do that. Looking at this document 211-325E, page 3, it just says generator interconnection feasibility study, VC Summer Nuclear 2. And, this well could have been part of a bigger plan, but it appears to have just been something to look at the peripherals, I guess transmission lines or whatever, assuming the nuclear reactors were constructed. Is that correct?
I can answer that. Yeah. Well, that is the first step in the large generator interconnection process. It calls for, FERC processes call for a feasibility study, and then you follow that up with what's called a system impact study, which is an even more thorough analysis of exactly what would need to be done. It includes things like stability analysis, short circuit, a lot of additional analysis in that second step. And then there's a third part where you do a facility study and actually estimate in detail all the costs associated with the improvements that are needed. So, but I think to answer your question, while it is a feasibility study, what was determined in that the document that Mr. Ziegler is showing was also, the same conclusion that carried forward through the system impact study phase and the ultimate facility study phase, and was the plan adopted and planned for.
Thank you. Yes, I see where, it said additional studies include system impact studies, so forth, depending on, I guess, what this showed. And it was simulating 2016 peak summer conditions. As mentioned, this study assumes VC Summer number 2 unit is complete and the following associated transmission projects, which it lists, Killian and I think the ones you've discussed. Also says, additionally, this study assumes that the following proposed transmission modifications will be made by Santee Cooper to their transmission system as part of that. And I'm assuming that's the 1, 2, 3, those list on page 25 of 96. Is that correct? VCS Winsboro, Richburg, Flat Creek.
Yes, those sound accurate, and I'm glad you asked that, because I did want to clarify one thing that I didn't get an opportunity to. That's an important part to, and was our point about talking about what we replaced when VC Summer 2-3 were decision was made to abandon. Mr. Elliott had mentioned a couple of times that it was 2,200 megawatts of generation that are no longer there. Well, that number is accurate. That was the total output of the two facilities. Dominion Energy South Carolina was only responsible for 55% of that, and Santee Cooper was responsible for 45% of that, and the associated transmission that needed to be built to accommodate that. So 55% of that is roughly 1,200 megawatts, quite a bit different than 2,200 megawatts. But the point was that while those were abandoned, we replaced that with 800 plus megawatts or thereabouts McMeekin Generation and Columbia Energy Center that are still in the greater Columbia area, and will be using these new facilities to move that power efficiently down to the low country where there's a very, that was our point, about the usefulness of these new projects. And I just want to clarify that it's not 2,200 for Dominion purposes that we're here today. It's about 1,200. So I just felt the need to clarify that.
Okay, understand. And at the risk of sounding repetitive, what would be useful, at least useful to me, and I think to the commission, not now, in the future, I'd really like to see the big plan, the whole plan, the future plan. I mean, this is nice, but it's null and void, pretty much, as far as what the original plan was. Anyway, just my comment about, I think, moving forward on legitimate master plans, whether it's 20 years or what, so we can kind of see it all one time. You can update them annually every 2 years. Whatever you need to do is I guess, up for debate. But individual studies, while useful, don't necessarily shine light on the big picture. But thank you very much.
All right, sir, you may step down from the witness stand and be excused. We're on break until 3:15.
Thank you.